Hi everybody, how you doing? Welcome to the show this morning. Your buddy Uncle Bruce here. I was in makeup, and the makeup lady said, "I need more time." I said, "I don't have any more time. I have to go live at 8:30 Eastern to a worldwide audience of probably millions of people because although it might say there's only a few hundred watching, they have friends and they tell their friends what's going on and so on and so on and so. And the first thing they talk about is, did you see what he looked like this morning? It was a mess. So she needed more time to work on me this morning. And here we are. So here it is. Hope you don't mind. It's not too bad for you. Thanks for joining me this morning here out of Palm Desert, California. It is Monday, February the 14th. And in case some of you folks aren't aware, this is Valentine's Day. So any of you out there who need to take care of anything for later today, in case there's something you have to acquire, order, deliver, come home with, just saying, it's your friendly heads up from your nose blowing homeless Canadian here in Palm Desert, California. And you're welcome. If it helps you at all, if I in any way have helped you avert any kind of a disaster, I am happy. There you go. There's your your helpful community service announcement. Valentine's Day today. All right. Okay. Welcome one, welcome all. We're here live to talk about the stock markets in plain English. And we have a lot to talk about. When I woke up this morning at what time did I get up? I get up at 3 in the morning here in the Pacific, on the West Coast. I get up at 3 a.m., which is 6 a.m. Eastern. At 6 a.m. Eastern until about 6:30 Eastern, at least, these markets looked really bad. The pre-market for North America looked absolutely miserable. We were 1.5 to 2% lower across the board. It was like Friday was continuing on lower. Europe wasn't helping; it was off. The Asia markets had been off, just terrible. But it turns out that in the last 30 minutes, we've had a bit of a break here, and it appears that there was some kind of a staged television event out of Russia that seems to look. It seems to me that Putin had on camera with him his Secretary of State Lavrov, who's been his guy for, I don't know, 15 years. They've been inseparable, and that's a good thing. When you have a trusted you know you have a trusted ally like that, you keep them close to you. And so Lavrov and Putin were talking on, I don't know, on a staged event. I don't know if it was really a news conference or what it was, but somehow the president of Russia was at the table, and Lavrov was sitting to the side of him, and Putin asked Lavrov, "How's it going? How's it going with this Ukraine thing?" And Lavrov indicated to his boss, well, "I think we should keep going on a diplomatic route for now. I see some potential there." And then Putin went, "Okay." Well, that just calmed the markets right down. It just made that dropped oil, I don't know, buck or two a barrel. It's now 92.56. It's down 54 cents on the day. The market's improved dramatically. We're in the green everywhere. The oversold market philosophy and mentality is back in play, and so we have the Dow up 13 points in the pre-market. We've got S&P up 2.75, up just shifted to 3 points, and we have Nasdaq up 5.25. So it's a positive, okay. And while that's going on, that's good news. The treasuries. This is the other thing that we've been watching carefully. The 10-year treasury is moving higher on the yield, which is a really good thing. The 10-year note had been pushing about 2.2, 2.3% last week. Then it plummeted all the way down to 1.92% as cash fled into the US economy, into the US treasuries for safety. And that dropped the treasury yield down, and the value of the treasury went up. And now this morning, in the space of an hour, we've gone from 192 to 198. And so we're now back to discussing the what's the word I'm looking for? The topic of the day is now interest rate rising again. Interest rate rises. We're back to that discussion because we're not out of the woods with regards to the markets going up or down, or having uncertainty, or having volatility. It's just shifting our focus from one crisis to another. So the Ukrainian thing is kind of calmed down for the moment. And now we can turn our attention to the problem we've been dealing with lately, which is higher interest rates. But that discussion last week, up until the Ukraine thing kind of came up, the markets are going up. The markets were climbing in the middle of the discussion of higher interest rates. And I note that breaking headline, Fed's Bullard, who's the St. Louis Fed guy, he backs a 1% interest rate hike between now and July 1 of this year. But he's leaving it to Powell and the Fed as a whole to propose how to get there. You want to do a quarter point in March, a half a point in April, a quarter point in May, or do you want to do a quarter point in March, April, May, June? Do you want to do a half a point in March and 2 quarters after that? There's your 1%. So he'd love to see 1% higher interest rates for the Federal Reserve. I think that would bring the Feds to 1.25%, because right now I think it's at a quarter percent. 1.25% federal funds rate in the overall context of the history of interest rates in the modern world, let's say since post World War II, or even from the 60s to now, kind of we consider that to be modern, since we sent men into space in the 60s. Did you know that we sent men into space starting in the 60s? Anyway, that's another story. Anyway, 1.25% Fed funds rate is historically very, 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 very low. For you kids out there who are 35 and younger, you've never experienced 18% lending rates. Matter of fact, even if you're 40 and younger, you've never experienced prime interest rates of 18%. 1.25% Fed funds rate is a joke. It is almost always been. It has always been. I mean, not almost always. That has always been a figure below any historical inflation rate that has ever been measured in North America. You could say, I know you could figure out, some of you crafty folks out there, you'll go Googling and you'll say, Bruce, in a 3-month period between here and 19 whatever, there was a zero interest rate, there was a zero inflation rate, or it was a declining inflation. Yes, that's true. But on overall historical averages, when you kind of put it together on a big picture, 1.25% Fed funds rate is unbelievably cheap. It is unsustainable. You cannot keep the Fed funds rate at 1.25% and make everything else work perfectly. You have to have higher. It's just the way it is. And the reality for the Western world, historically, the reality of the Western world has been and will be the following. Governments, generally speaking, spend more money than they bring in because their voters never want to let go of a gift that they get from the government. They always want to get, but not give. So that means they want lower taxes, but they want higher return for their lower taxes. Governments are run by people at the top who have to win popularity contests every 2 years or 4 years or 6 years, depending on where you live. Again, Western democracies I'm talking about. These governments are run by people who have to win popularity contests to keep doing what they do. And a lot of these folks at the top get addicted to the perks of being at the top, and they don't want to let it go. And because countries or the citizens of these countries do not insist on term limits and specific amounts of time you can be in this echelon, you have lifers who would never ever quit. The only way you get rid of some of these guys, a lot of them, is when they end up in a pine box. And even then, they hang around the Capitol for a while before we get rid of them. This is everywhere. This is not an America thing. This is not a Canada thing. This is an everywhere thing wherever democracies are. There are certain countries where certain elected people never leave. And the problem is that they try to pass it on to their kids and their kids' kids and their kids' kids' kids. And the public, for whatever reason, just loves familiarity and keeps voting in the next generation of these saps who are just bloodsuckers. Nonetheless, that is another topic entirely for another show, probably another channel and another area. But back to the Western world. The Western world is addicted to spending more money than it brings in, generally speaking. Sometimes a catastrophic event makes governments spend more money, like really bad tornado season or hurricane seasons, earthquakes, wars, terrorist attacks, unforeseen stuff you don't put in the annual budget. But it's also quite common for governments to just spend because there are cutbacks in certain areas of government spending that lead to eventually much higher expenses elsewhere. That just blows the budget out the door and blows the future of the budget out the door permanently. And I'm not going to go there because it is so political. I don't want to talk about it. Here's the thing I wanted to say. The point I wanted to make with regard to interest rates and governments is that Western governments need inflation, a certain amount of inflation, maybe 3 to 4% is kind of a number. That's a kind of number that we can all kind of live with ish. 2 to 4%, 2 to 3% is even better. But anyway, 3%, we can handle that. If we get a 3-4% raise at work every once in a while, that appeases people if the price of goods don't go up more than 4%. It's when the inflation goes up 10%, you only get a 4% raise or a 3% raise. That's when you get upset. But the bottom line is this. Governments, Western governments, borrow money to make up shortfalls. And they justify the money that they borrow against their GDP growth. So they'll say stuff like, yeah, we know we owe trillions of dollars to bondholders that hold bonds in our country. But our economy is multi-trillions of dollars large. And the debt against the size of the economy is only 3.5% or 5%. And so we can carry this debt. We justify having it because we can easily afford to carry it. And with interest rates at 0.25% right now, the United States government is issuing 10-year bonds, 10-year treasuries at what did I just tell you? 1.9 something percent interest. Wouldn't your life be a lot cheaper if all the debt you have between your car loans, student loans, mortgages, credit cards, and any other debts you've got were tied to the 10-year treasury at 1.98% right now? If your entire debt load was recapitalized at a 1.98% interest rate, even if it floated every month, 1/10 of a point here, 1/10 of a point there, up and down, don't you think the cost of your life would be a lot cheaper? I would say so. In any event, what governments count on is trying to set the rates relatively low against a low inflation rate. But with an inflation rate of 3%, it means that the money you borrow this year and the money you borrowed last year and the year before that, and all the way back to 30 years ago, because there are 30-year bonds out there, means that this year the United States is paying off 1992 bonds. And next year they'll be paying off 1993 bonds and so on. Now, for a short period of time, the U.S. didn't issue 30-year bonds. During the Clinton administration, I think it was in his second term, the U.S. economy, the U.S. government was running a surplus. It was the last time it actually ran an annual surplus for a number of years in a row. And the United States government didn't need to issue 30-year notes. It didn't need the money. It had 30-year notes maturing from the 1960s, but it didn't need to issue new 30-year notes to pay those off. The United States government was issuing just 2s, 5s, and 10-year notes. And in those notes was enough cash coming in to knock off the 30-year notes, the 2s, the 5s, and the 10s as well. Because every week there are 2, 5, and 10-year notes and 30-year notes maturing in the United States because they've been issuing debt forever through the Second World War and so on. And so the United States government didn't have to issue 30s to take care of its obligations. And that was about 3 or 4 years in a row until George Bush Jr. showed up. And the first thing he did was cut taxes for those Republican backers of his, which put the U.S. deficit into play right now. The U.S. ran a deficit immediately because it was trickle-down economics. You see, if we could cut taxes at the top for the billionaires, all that money will then float into the economy, and all the poor people at the bottom will get rich, 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 and it'll be great. Unfortunately, it didn't work. And of course, you give poor people an extra $100 a year or $1,000 a year in their pockets. Guess how much tax a poor person pays when they make an extra $1,000 a year, $80 a month? Nothing. They pay no taxes to the federal government because the first 10 grand you make is tax-free pretty well with all the write-ups. And so it doesn't work. So you cut trillions of dollars off the top over a 10-year time frame and expect all those trillions to end up coming through the economy, which will create so much more economic revival. But it didn't work. It didn't work. So the U.S. went back into a deficit under George W. And of course, then George had the little problem known as 9/11. That was a little flare up that came up in his little presidency, and trillions of dollars went out into the military because those are blank checks. You just pay whatever the Pentagon tells you to pay. And so the American public had a brand new war to fund in Iraq and in Afghanistan. And away we go, and deficits galore. Anyway, that's the deal. Now, back to the point. If inflation is 3%, it means that these 30-year bonds are 30-year-old debt that we're paying off. So in theory, a 1992 30-year bond that would mature this week, back then the deficits were 100 billion a year. Today the deficits are $1 trillion a year. So the United States government is paying off debt from 30 years ago that's maturing now. It needs 100 billion, 200 billion, 300 billion this year to roll over debt from 30 years ago. That's all. It's a joke. And it's wonderful. And this happens in Canada. It happens in Mexico, in the UK. It happens in South America. It happens in all democracies that borrow money. And we today are paying debt from 30 years ago. Now, I'm 66. This means debt that my politicians that I voted for when I was 36, I'm paying for those debts now. But it's just a rollover. We talk about doing rollovers on options. Governments are rolling over debt all the time. They never pay off the debt. They roll it over. And they just pay the interest on the debt for the 30 years. And here's the good news. For the last 15, 20 years, we've had a very low interest rate policy. We certainly have had a very low interest rate policy since 2008, since the last economic crisis. That's already 14 years ago. For 14 years, we've had interest rates way down here below inflation. And so for 14 years, the United States and Britain and France and Italy and Spain and Portugal and everybody who's been issuing government debt has been rolling over their debt from 30 years ago, 10 years ago, and what have you, into today's interest rate environment. And so the United States government has had savings coming in every year for 14 years with regards to its budgetary needs to pay its interest payments. And no politician is bragging about this on the campaign trail, because any politician stupid enough to mention debt as a good thing doesn't get reelected. You don't go there. The economists go there because they're not elected. They can tell you the truth as to what's really going on. And a homeless Canadian, what have I got to lose? I have 454 viewers. I got nothing to lose. So although you all have millions of friends, so actually I'm talking to 454 million of you right now. In any event, rolling over this debt from years ago is a joke. And for America, Canada, and others, we as taxpayers, this is good news for us. We, all of us here, as citizens of our country, are paying less cash, less money out the door, and we have committed ourselves for the next up to 30 years from now. That means when I'm 96, 96, my daughter will be 63 in 30 years. My daughter has been saddled with debt that we've rolled over here the last number of years, but only at 1% interest, a quarter of 1% interest, half a percent interest. Because remember, the 10-year treasury last year was at 1.2%. The low of the treasury's numbers was 0.6, 0.7% for like a year. The 30 years were 30-year bonds were down to like 1.5%, 1.3%. So we have saddled our children and our grandchildren with the gross debt. Yes, that's true. But the interest rate on that debt is at an all-time record low because of this very low interest rate policy. Unfortunately, it's going to come to a bit of an end, but I don't see rates going to 7 or 8%. I just don't think so. I just do not think so. And so the good news is if inflation actually is going to now move up into the 3-4% level, all this debt that we've acquired, which is now, I don't know how many, is it $20 trillion in the United States? I don't even know the number. In Canada, it's, I don't know, so many hundreds of billions, or I don't know what it is. It's probably it's a tenth of the US amount, basically, because the country's 1/10 your size. In any event, it's irrelevant money. It doesn't matter, because 30 years from now, when today's 30-year notes come up for renewal, we'll be dealing with dollars that are 30 years more valuable or inflationed going forward. That means that today's money is worth 40 cents on the dollar to the future. And so we're handing our next generation of taxpayers a smaller amount of money that they have to come up with, because they're working with inflationed dollars down the road, inflationed British pounds, inflationed euros, all that stuff. That's the name of the game, and that's how the game keeps getting played. Look at all of you who are now in your 40s, 50s, and 60s. If you think back to your parents when they bought bought a house in say the 80s and the 70s and the 90s, when you were little kitty boos, what they paid for their house, versus what their house is worth now, you're just amazed. I know a lot of you out there going, oh my God, my parents' house? Oh, geez, that thing is worth $1.2 million. They bought that for 250 grand back in whenever. And that house was originally built, it sold for 100, but they bought it for 250 down the road, and now it's worth $1 million or more. This is where retirement money comes from, but it's all inflationary, because many of you know that if you want to flip the house you're in right now for another house, guess what? You've got good news. You can get top dollar for your house, kind of. But bad news, you got to pay top dollar to get another one. And so you're not ahead, but you are ahead if you're my age and you're saying, yeah, we're selling our house. We're not buying another house. Guess why? The kids are gone. We're empty nesters. They're out of here. They've gone to school, college. They got families. They're gone. We've shut the door behind them. As soon as that last one walked out of here, we shut the door. We sold the damn house so they can't come back home. And we took a condo in Sarasota, and it's only a 2 bedroom. And it's only a 1,000 square foot condo because mama don't want to clean 3,000 square feet no more. And so we've completely changed our lives. That's what's been happening here with a whole bunch of all of a sudden 50-year-olds and 55-year-olds in the last year and a half, 2 years, where it used to be they had to be 60 to 65 to really make that happen. Now it's 50, 55-year-olds who are saying, I'm out of here because this house that we're sitting in here in this suburb outside of wherever in the Northeast, this house has escalated in value so much because of COVID. We're taking the money. This has moved up our retirement age by 5 years, 10 years. We've also figured out something else. We've been watching Uncle Bruce on the YouTube channel. And this guy's been talking now for a year and a half about this idea of working from home. We thought he was out of his freaking mind when he started talking about that. And then we realized everyone we know is working from home. And then this guy has the audacity to say, well, you know what you could also do? You could work from home and trade the stock market. And why don't you write options and enjoy the depreciation of call options as against your stock and not ever go back to work? Sell your house for your 800,000, 900, whatever you can get for that house up, wherever it is you live, for way more money you ever thought you're going to get for it at this point in your life. Your mortgage on it, if you have one, is a fraction of the value of the house. You've got this fat equity situation. You move to where you want to really retire to, which could be in the same neighborhood you are now, theoretically, but you're going to move into maybe a condo type of a complex, a townhouse condo type complex, or you're moving to sunny states in the Southwest or the Southeast, wherever it is, you're going where you want to be going, in a place you want to be in. And chances are, if you're playing it the way I think you are, and a lot of folks around here in Palm Desert and Palm Springs and Rancho Mirage and La Quinta, this whole region here, there's an influx of 50 to 55-year-olds coming into this town, have been now for over a year. And what are they doing? They are buying condos that are on golf courses that were built 30, 40 years ago, that were seasonal homes. These were condos that were only lived in for 4 to 5 months of the year, the winter time. These folks are moving in full time. They're coming down here and picking off a condo for 400, 450 grand that has a homeowners association arrangement. Inside this complex where I am right now, Monterey Country Club, they're buying condos here. The deal is your homeowners, you don't do anything on the outside of your condo. You don't lift a finger to take the weeds out of the grass, cut the grass, insecticides for ants or bugs or whatever. You don't paint the outside of your unit. You don't touch it. You don't touch your roof. The entire outside of the condo is all handled by the homeowners association. You only deal with the inside of your condo. So if your dishwasher breaks down, that's your problem. But if your outside sprinkler isn't working properly, you don't have to worry about it. You call the homeowners and say, I got a leak on the outside sprinkler apparently. They come and fix that. That's their deal. They'll have a person there in 15 minutes. What's going on? You don't do nada. So you don't have yard work to do. If you don't have yard work to do, by the way, if you want yard work, I'm sorry, you can't do yard work in this complex. But the folks who are here, they don't want yard work. And so they don't own, no one here owns a mower. There are no lawnmowers owned by any of the homeowners here. There are no tool sheds in the back or anywhere around here for the tools. None of that. You keep your stuff in your garage for whatever you need it in there for. Everything else is done by the homeowners association. We're talking about a carefree lifestyle. So this means you have hours of time, daylight time, to do something else. Well, let's go golfing then, or play tennis, or pickleball, or go swimming, or just get a tan, or go for a walk, or grab the dog. You'd have dogs here, cats. Go take the dog for a walk. Go hiking. Go for a bike ride. You figure out what the hell to do with yourself, but you're not cutting the grass, looking after the lawn. You're not doing any work on the outside of your condo, and any work on the inside of your condo. You're smart to just hire a professional to do it so that you don't get your hands dirty and all that sort of stuff. Unless you're into, ripping up your condo while living in it. You want to do that. You're nuts, but knock yourself out. These folks are buying these condos here and are figuring out I can work from here in one of these bedrooms. I'll just convert it to an office. I'll get a wall, put some stuff on the wall, or I'll put up a screen back, green screen behind me, and I'll put up an image of a lamp and a picture, and I'll pretend to be where I am. Like right now, I'm in Paris, and they'll fall for it every time. It's incredible. So folks are working from home inside these condos and retiring here at age 50. 51, 52, and the kids are coming down in the middle of the winter for a week or so, or 3 or 4 days, or what have you, depending how far away they are, to spend a little time with grandma and grandpa. And grandma and grandpa takes them to the pool, which they don't maintain either. They don't hire a pool boy to look after the pool and the hot tub and all that. That's all done by the homeowners association. So grandpa has a golf cart in the garage, and he unplugs it and piles the kids onto the cart, and then they go driving over to the pool. And how about a wonderful time there. The kids come down and look at mom and dad and go, wow, this is pretty good. And the funny thing is, mom and dad are in their late 50s and 60s, and the kids are into their 30s. And these kids are going, gee, mom and dad, we're up in Pittsburgh, Philly, Baltimore, New York, Albany, Cleveland, Cincinnati, Chicago, Detroit. We're up there. It's cold in the winter, muggy as hell in the summertime. Taxes are not going any lower up there. It costs just as little to live here or as much as live here, depending how you want to do it. Wow, we could sell our house that we bought 5 years ago, where we scraped and begged and borrowed and got a down payment together, and we bought a place for $400,000 or $600,000. It's gone up $300,000. We have equity in our house that we never thought we'd have at this time either. Not enough to retire on, but we got like 200, 300, 400,000 equity built up in our house all of a sudden. And we've got our 2 kids or 3 kids, and we just figured out we too could come down to this area and live here near you guys, so that we're always near grandma and grandpa, like we used to be at home. But now the new home is here. They've got built-in babysitting inside this country club from time to time. Grandma and grandpa can come over to their house and babysit the kids in the house rather than have the kids come into the private club, especially if it's overnight. All of a sudden, mom and dad, the mom and dads out there are going, I think we're going to sell our house up here in the north and head south where grandma and grandpa are. And we're going to work from home because we're working from home. We're going to work from home down there. I'm not quitting my job. I still will work for the same company I've always worked for, except that I'll work for the same company now out of Phoenix, out of Scottsdale, out of Glendale, out of Tempe, out of Mesa, out of Palm Desert, out of Rancho Mirage, out of La Quinta, out of these areas. I don't want to be in downtown LA. I don't want to be in a suburb of Los Angeles. We don't want to be in a big, giant city area. We're going to be outside of that heavily populated area. We'll head for the desert where grandma and grandpa are, that small, sleepy valley compared to where we are now, which is just outside of Philadelphia or outside of Cleveland or outside of wherever. We're going to do this lifestyle instead. There's schools here. There's all kinds of activity for kids to do. There's the dance clubs, soccer clubs, teach kids to play golf, whatever. That's what's happening. And that's exactly what's going on. The shift is on, and it's been on for over a year, and it's accelerating. And talk to a realtor here, and I have had a chat or two with a couple of folks who are realtors down here because we're renters and we talk to them all the time about when we were looking for a place to rent. And they're saying to me, Bruce, you own a condo down here and you want to sell it? 5 minutes. I can have a bid for you in minutes. In days, you will sell if you're in a hurry. You will get multiple offers, multiple on every single listing. It is unbelievable the demand for 2 bedroom, 3 bedroom units. You want a house around here? Oh my God, is there a demand for houses? Because of course, most of the houses around here have pools in the backyard. So if you got a family of three, yeah, there's a strong desire to get a house with a pool. And oh my God, we have no problem selling places. It's finding them. It's finding the house to buy is the trick. Well, I ought to know. Trying to rent a place down here for the winter is a trick in itself. Anyway, that's what's happening down here. And it's happening in Florida. It's happening in the Carolinas. It's happening in Texas. It's happening in Nevada, Las Vegas area. It's happening Arizona, of course, of Tucson and the Phoenix area, and now here all over California. Unbelievable demand for what used to be winter accommodation or seasonal winter, even inside these country club settings, which were strictly 3-4 months a year, people would be here, and the other 8 months of the year, the condo would be empty. There would be nobody in here in July, nobody. But now there are people who live year round here, or they're here year round, but in July and August, what northern transplants do, the transplanted northerners, they fly home. They fly home to the north and they go see the relatives that are left in the Northeast or the Northwest and are in a bit of a cooler situation up there. It's in the 80s and the 90s as opposed to the 120s here. And so they're gone for 5-6 weeks and then they come back here and finish the rest of the summer. That's what's happening here. It's a whole different ballgame. Anyway, these prices here are appreciating as well. It's quite amazing. Welcome to the show. Welcome to the rant here with your buddy Uncle Bruce. The markets have gone negative again, but this is not an issue to worry about. Where the Dow is down 62 points, S&P down 10, Nasdaq down 53. The market's just trying to find themselves. They're just trying to figure out where they're headed, where they're, what they're about. The interest rates are now 1.97% for the 10-year, so that's up 5 basis points. And as long as it does this, if it inches back to the 2% level, the Ukraine thing is down on the back burner, and interest rates are on the front burner. The question is, will this be the way going forward? We shall see. I note a couple of things for you this morning that you may want to know about. Smart Rent is being covered for the first time by an analyst at Keefe Bruyette, Bruyette, Keefe Bruyette, outperform rating for Smart Rent with a target price of $13. It's the first time they've ever rated the company. They start Smart Rent at 13. Smart Rent, as of Friday, closed at $8.68, and they're calling it a $13 stock within the year. Good to see. I also note that Goldman Sachs has come out with a prediction for the S&P 500. They've lowered their S&P projection from 5,100 on the S&P 500 down to 4,900 for the S&P 500. It is right now at 4396. Let's round it off to 4,400 for just between friends. So right now the S&P is at 4,400. Goldman predicts this year it will reach 4,900, and that's a downgrade. So that's a lovely percentage increase from here, 11% from here, just on the downgrade. All right, and they're doing it not because of speculation or anything like that. They're doing it on earnings. The guys and girls at Goldman Sachs are looking at the S&P 500 index, looking at all the stocks that are in that index and how much money these stocks make, net earnings per share. And they're coming out with their projections and saying, based on earnings that have been happening the last 12 months and projected earnings the next 6 months, we expect that the PE multiple and the earnings per share, the average, this market should be 4,900. Okay, so keep that in mind. Speaking of the index the S&P and others, I heard something this morning that I thought I'd throw your way. I've mentioned this before in different ways, but this is specific to Apple, and I thought this was kind of interesting. Apple, the company, largest market cap company on the planet today, the Apple company makes up 7% of the S&P 500. Just Apple is 7% of the S&P 500. Of the Nasdaq index, which is it's a Nasdaq 100 index, smaller index. Apple makes up 12.6%. 1/8 of the Nasdaq is dominated by Apple. So if Apple goes up a couple of bucks a share, that is a profound effect on the overall index performance of the S&P and Nasdaq. On the Dow, Apple is 3.2%. Well, that's average because there are 30 stocks that make up the Dow 30. So if you took 30 stocks and figured out, well, how much of the index is 3.3% for each company, right? 3.2 for Apple. Now, what I find interesting is that Apple is the most valuable company on the face of the earth. It's the largest capitalization company there is. But the Dow Jones Index is more focused on stock value rather than on market cap of the company itself. And so if the Apple stock were trading at 300 a share instead of 170 a share, it would have a larger impact on the Dow. Kind of interesting. But the Dow doesn't want stocks over 400 or 500 a share. Like they don't want $500, $600 stock as part of the Dow 30. Anyway, that's another discussion for another day. What I really wanted to mention to you was the S&P 500 and the Nasdaq. Apple is a huge dominator of both of those. And that brings me to the notion and the talk that we've heard lately about a market crash. Is there going to be a bear market? Is there going to be a market crash? Are we going to see severe depreciation in the stock market because of higher interest rates or because of higher inflation or because of a combination of those plus a slowdown in the economy, a recession, Keep in mind, the top 7 companies that dominate the Nasdaq, that dominate the Nasdaq, the top 7 are the FANG stocks plus I believe Nvidia and Tesla. They make up 48% of the Nasdaq index. All right. Of those 7, I think 5 of them are massive corporations that buy back their stock aggressively, Apple being one of them. And so what the analysts don't keep highlighting, and they should, I bring it up a lot to let you in on what really you should be watching for. It's plain English here, folks. In plain English, Apple has committed $90 billion to buy its own stock back, which is $7.5 billion a month of stock buybacks. And with a 20-day a month trading number, usually there's 20 trading days a month, give or take. Sometimes it's 22, sometimes it's 19. But with 20 trading days in a month on average, $7.5 billion divided by 20, $375 million a day of stock. Just get that through your head. Every day, Apple averages $375 million of purchases of its own stock and doesn't trade them ever again. They cancel the stock certificates and put them back into the treasury of the company. Every day, 5 days a week, 20 days a month, $375 million a day. Just Apple stock. I mean, how many of these are they selling? A lot. These are numbers that are unfathomable for all the other 500 stocks, while at least 300 of them to even think about. $375 million a day in stock buybacks. Just Apple. Then there's Microsoft. And there's the others, the rest of them. I mean, the Oracles, and Amazon is allowed to buy stock and has been, but hasn't been that aggressive. But until this year, they've started buying back their stock. Google, and on it goes. There are companies out there buying up hundreds of millions of dollars of their stock, hundreds of billions of dollars of their stock over the last number of decades. And then the other 93 companies that make up the NASDAQ, a whole bunch of them also buy back their stock. So in order for the market to have a crash and to have a really bad run, the market would have to go so low that Apple will have bought all the stock it's allowed to buy in the calendar year, and it still keeps coming in for sale. So that would mean 5% of all Apple shares outstanding would be purchased in one calendar year by Apple, because that's how much they're allowed to buy, a maximum of 5% a year. And you still want to get out. That would be that would have to be a catastrophic drop in business for Apple for that to happen. I mean, they'd have to post quarterly results that are so bad that the street's going, oh, we had no idea that the economy globally was this bad. Because remember, Apple's not USA only. Apple is international. And the same can be said for Microsoft and Google and many, many other companies. It's just not going to happen. It's not happening. So these buybacks are in effect a stabilizer for the markets. Corporate cash keeping the market right where it is, or allowing the market to come down. Sure, Apple can't stop its stock from dropping, of course not. But Apple can certainly retard the drop. They can really stabilize it. And at the bottom end, Apple can pick off stock left, right, and center. And it just disappears. It doesn't come back. All of a sudden, traders are realizing Apple's not easy to buy. It's like I can buy it, but whatever comes in just gets picked off. There's always a buyer for it. Yeah, because there's this huge base below the bid for Apple's pricing. I mean, Apple's buying power. It's amazing. So I don't see a massive pull-off of the markets because of the amount of cash corporations have, and they are cash rich, as we know. They can buy up a ton of this stuff. And Apple just renews their buy program every year, and they seem to raise the budget every year to put more towards stock buybacks. Corporate America would rather do stock buybacks than issue dividends. They'd rather do stock buybacks than issue dividends because they want to show the American investor, you're going to make more money buying our stock on a capital gain than you are on dividends. And that's what most American investors want. They want to grow their capital gain growth more than what they want from a dividend income scenario. Because for the last 15 years, money at the bank is 1% every year, 0.5%, 1.25% is all you're going to get in your money. Apple has hardly had to raise dividends to beat those guys. They've just been showing you, well, our stock doubles every 2 to 3 years. Why don't you just buy our stock? And that's what investors are happy having. If you have a 30% growth in the stock value every year, what do you need a 4% yield for from your dividend? You don't. You'd rather take the capital gain. Taxes are lower on capital gains than on dividends anyway. So there you go. We're about to open in 10 minutes. Welcome to the ranting Canadian, the ranting homeless Canadian here from Palm Desert, California. Thanks for joining me and being part of this show. Thank you all for your support of this channel. Those of you who've been joining this channel as subscribers, thank you, of course. Love this. And obviously, those of you who are now members of this channel who are over here commenting, all those members over there with their little icons beside their name, thank you. A bunch of you are about to become 1-year members of this channel. It's coming up starting the 16th of this month. It starts in 2 days, starting 2-3 days from now. We're going to have all kinds of these emojis here change color to show off 1-year loyalists of this channel. Incredible. It's been a year that I started this. I can't believe it. Thank you all of you who are chilling with Uncle Bruce members. Also those of you who are gold bagel members, man, you guys are incredible. Thank you very much for that. I hope that you are happy with what you are receiving being a gold bagel member. I hope you're happy. I like to think that giving you an alert every morning before I go live at 8:30 and a primetime show on Wednesday nights, it makes it worth your while to want to remain a Gold Bagel member. Thank you all. Those of you who are chilling with Uncle Bruce members, of course, you're right here every day throwing me comments and letting us know what's going on. Love that, and we thank you. Jennifer and I, my Jennifer Aniston lookalike wife and I, we thank you very much for your loyalty to this channel. It keeps us going. No question about it. Memberships, it's what it. Without memberships, we'd be gone. Our numbers on YouTube are so bad. I don't have a huge audience as far as millions of views every week or every month. I'm not a sensationalist. I'm not coming out with get rich quick schemes and mother of all short squeeze promises and all that. And I don't day trade on my account. I don't own any stock. I'm here as an analyst and as a commentator. Really, I analyze and comment on what's going on and throw you the ideas, and you guys decide what works for you. And a lot of you have picked up on writing call options to make money in this market, no matter which direction the market wants to go. We're watching GameStop here. We're keeping an eye on where it's at and what it's doing. And we're saying to GameStop, you pick the direction. You want to go down, we're buying calls back. You want to go up, we're writing calls. You want to go way up, we'll roll over calls. You tell us, you show us what you want to do, GameStop. Doesn't matter to us. We make money if you go up because the stock goes up in value and our contracts shrink anyway. And we'll always roll over if we have to. And if you want to go down, well, then we make money on the quicker shrinkage of value of these calls we've written against you, and we'll get paid for rent even quicker. So you tell me what you want to do. And I wanted to mention something else to you. I had a couple of sessions this weekend, which I really love doing. These one-on-one sessions that some of you booked me for. By the way, this weekend I have no slots left. I'm not available this weekend for any slots. I only had one available. It's already gone. It'll have to be the weekend after before I can talk to you about offering any more openings. But this past weekend had some interesting sessions. And one of the things that came out this weekend was some of you have been talking about and have been doing trades and been writing options on your shares of SoFi. And I wanted to mention about that. By the way, SoFi's up 31 cents right now at 12.72. It's up 2.5% on 3 million volume so far in the pre-market, so it's looking stronger. In any event, I was talking to one of you out there, and we're going over the SoFi situation for writing options on SoFi. And some of you last week were writing $15 options on SoFi for March the 18th, I think it's the 18th of March, about a month from now. And you were trying to get you're trying to bring in about 80 cents, 75 cents, 90 cents per contract, which is, $80, $90 for every 100 shares you have. Now, some of you have 1,000 shares as an example. You could write 10 contracts, bring in 800 a piece. That's $800 you're going to bring into your pocket for now until mid-March. If the shares stay under $15, those contracts will expire worthless. A number of you, of course, are quite savvy, and you're saying, well, I'm going to sell my contracts at like 90, and if I can get them back at like 50, 55 in a couple of days, because the stock does fluctuate, if one of those little dips down, these contracts come back enough, I'll buy them back. I'll take 30, 35 cents off the table. That's, $350 I'll keep. And I'll sit back and get ready to write again. If those shares want to come back up into the 12, 13s, I'll write those 15s again for another 85, 90 cents and look for a pullback if you want to give me one, and I'll buy them back. The other thinking is, well, even if I don't buy them back at 60 cents, as each week goes by in time, if these shares don't reach 15, those contracts will shrink in price because they're not in the money. Anyway, I talked to a viewer about this strategy, and then talked to the viewer about another strategy that I brought up. And that was, the viewer is asking me, well, would it be a good idea to buy the stock right now and immediately write an option against it? And I said, it's always a good idea to consider something like that. And then I said, if you're not interested in these short-term trades, you just want to put a long-term trade together where you don't have to worry about minute-to-minute, second-to-second price movements. There's something else you can do with something like a SoFi. Buy the stock at $12.70 a share, turn right around and write a contract on that stock at $20 for January 2023. That's 11 months from now. It's about 10 and a half, 11-month contract. Write an 11-month contract. You'll get $2 a share right now. So you pay $12.72 to get the stock, and you get $2 a share to write the contract, and you're offering the stock for $20 a share. You're saying to the market, go ahead and run up the $23 a share. I don't care. I'm happy taking $22 a share for a stock I just paid $12.71 for. Is there a problem with this return? I don't think so. Just getting $20 a share is $7.18 profit, but getting the $2 premium makes it $9 plus in profit on a $12 investment. I think that's good return on your money for 11 months, don't you? And so you think about it going, well, if I bought 1,000 shares, Bruce, it's going to run me $12,700 to buy 1,000 shares, but I can get $2,000 in premium today, cash now. Now I get the money, and I gotta theoretically give my stock away at $20 a share if they go up there. I wonder if I can live with myself if I do this. So I was mentioning that to my viewer the other day and going, you can always do that and not worry. And of course, theoretically, if in 3 months from now the shares are at $16, they've moved up to 16, they're still out of the money. The contract in 3 months will only have 6 months to go. The likelihood is that it'll be trading at about $2 because it's lost 3 months of time. It's still $4 out of the money instead of seven something out of the money. It'll be worth $2. The contract will not have moved on you. You could theoretically buy it back if you want to, and take the $2 back. Give the money back to the option market. Get out of the commitment. Stock's at $16, and now you could say, I'm going to write a $22.50 contract instead. I'll write a $22.50 for next year, April, because it's 3 months from now. So you're not going to write an 11-month contract for April. And you might get yourself $2, $2.25 for those. The thing is, you don't have any new cash in your account. The cash balance is the same. You paid $2 to get these contracts. You got $2 to sell those contracts, but you just raised your price by $2.50 a share to $22.50. So if the shares do go to 20, you're sitting there going, well, I'm not going to lose my stock at 20 because I got a $22.50 contract. Thank you very much. Now, theoretically, you could buy back your 22.50s for about $2 and then write 25s or 27.50s for January 2024, and maybe you can get 250 for those and pay $2 to get these, and you're just raising the exercise price against your stock, and you're getting richer on a capital basis. But in the meantime, up front, you put $12.70 on the table to buy the stock and get a $2 option premium right now. And I'm approximating it, by the way. That option will fluctuate, obviously. That's, I think, a pretty good return on your money. Just kind of saying. Anyway, there you have it. Good morning, simpletons, to the show, and we're open for trading. I want to welcome you all here to the channel and to the markets. Larry has done what Larry does best, and that is indicated to all of us the markets are open for trading, and we're here, we're running, we're doing it. Let's see what the markets want to give us today and see how things go. Hopefully you will all get very rich this week and continue your highfalutin ways, and someday be able to buy that fancy kind of clothing that I keep showing off, with the frilly collars and the nice felt hat and the nice little walking stick. Yeah, baby, welcome to the show. I'm glad you're here. In any event, yeah, you can easily look at option writing strategies for SoFi at various levels if you want to. Of course, the other aspect of it, the other aim of it, is you just go, no, I'm just going to buy the stock at right now $12.49, wherever it's trading at, and it's going to go to $25. It's going to double my money. Thank you very much. And then I'll think about writing options, and that's okay too. You can also buy them today at $12.50 and write $15 contracts for this March, or you can write $15 contracts for this summer if you want something a lot closer in. You could write a $15 contract for next January if you want. You probably get more than $2 in premium. Yes, there's all kinds of ways you can play this game. It's totally up to you. and you have to decide how you want to do it. Obviously, if the shares of say Matterport can come back to $12, you could do the same thing with Matterport, writing 20s, and you could right now buy Sextera at 11.27 and look at writing 20s. You could consider that. They're 11.27 a share. By the way, that darkness you see right now, that is my ring light. It's acting up, and I just replaced this thing about a month ago, and it's now acting up because the plug-in overheats, and then the light kicks out. So I'm going to let the plug-in cool off for about 5 minutes, and we'll try it again. So don't mind me. I'm in a bunker. I'm fine. I'm not on the front lines in Ukraine, although you might think I am. I'm really in Paris, and it's all good here. This is the City of Lights having trouble. Anyway, thank you for popping in and seeing me, and it's nice to have you around. And if you have any questions for me that I can answer, I'll do my best. I'll try to answer, and let's go from there. At the moment, I'm showing the markets on the Dow. I think we're off 70 points now. We're about 3 minutes into the opening here. 60 to 70 points we're down on the Dow. We're off 7 on S&P, and we're down 32, 33 on NASDAQ. Compared to what it looked like at 3 and 4 in the morning, this is great compared to what we were looking at. It was awful. We'll see how this plays out. I've got Rocket Lab off 33 cents. I have SoFi at 12.37, down 3 cents. I have GameStop down $1.25 to 123. I have AMC off 12 cents to 18.68. This week, AMC releases numbers. I'm not sure about GameStop. I think that's later. Matterport is off 6 cents at early morning trading. ME is off 8. Spire's off 8. ATIP is off 7. Smart Rent down a penny. Sextera down 2 pennies. Robinhood is off 20 cents. Vanik Vector's down 32 cents. Home Depot down $1.78. IBM is showing off 90 cents. Microsoft down about $2. Apple off about 92 cents to $1. Goldman off 48 cents. Cisco down 73 cents. Facebook is off $1.10. Amazon off 30 bucks, 30 to $3,041. Tesla off $2.78. Google off 3.25. And then Bed Bath Beyond up a dime. BlackBerry down 7 cents. Royal Caribbean up 21 cents to 84.17. We have Target down $1.80. JP Morgan down $1.20. Costco off 70 cents. Walmart down 13. Nvidia up $2.46. Those are some of our early trades. Moderna down 5.55 and DraftKings down 74. So welcome to the markets for Monday, February the 14th, Valentine's Day, guys, girls, ladies and gentlemen. The Dow now down 127 at the moment. S&P down 7, NASDAQ down now 4. I think we've got a recovery here. Yeah, we're down only 94 on the Dow. We got a bit of a buy wave coming in here. Down 94 on the Dow. We're down 4 on S&P, and we're unchanged on NASDAQ. We're really jumping around here. Oil off 68 cents to 92.42. Okay, so oil is a little lower. This is what you need to watch for whether there's an invasion from the Russians into Ukraine, if they're going to muck things up. Oil will tell us instantly what's going on. If it's off 66 cents right now, there is no invasion happening as we are standing here. I think the minute that the Russians make a move into the Ukraine, like within days, they'll be cut off for oil sales to the West and natural gas. The countries will just shut the pipelines off and stop economic money going into Russia. And then, of course, the Western economies will probably put restrictions on ruble, euro, and dollar and other currency exchanges, making it much more difficult to exchange rubles into dollars. Although there are a million ways for Russians to do it, and they're prepared if they need to. But the ease of being able to move rubles into dollars or euros will be much more difficult. So the ruble will likely drop in value. That will cause tremendous inflation in Russia. Will make it much more difficult for the Russians to stay ahead of their deficits. And again, putting pressure on the president of the country and the boys who run the show over there to really think about what they're up to. Anyway, that's the possibilities. Whether there'll be restrictions on imports, exports to Russia, that will be an interesting thing to watch. Will Will Russian goods be not welcomed in the outside world? Will exports to Russia be cut off, in effect, starving them out to really make it hurt at the local level? Because it's not like you're going to rob Putin of being able to eat his favorite meal every night. It's the 200 million Russians who all of a sudden find their grocery shelving bare, imports disappearing in front of their eyes, and all of a sudden Russians realize the ruble is not worth what it's printed on. It's the U.S. dollar and the euro is what we have to buy off the black market to keep getting the goods we want. That has to be the plan. But unfortunately, that is a long-term starve them out plan. That is not an overnight, oh, that'll get them out. That's not going to happen. The rhetoric will be lifted to a level you can't believe. The state media in Russia will completely blame the West to force Russia to protect Ukraine from non-Russian interests. That's their plan. That's their story. Believe it. That's how they're going to sell it. And there are those Russians who will believe whatever Putin says, because there are always people who believe whatever a dictator says, no matter how stupid it is. And that's the modern world in which we live. And, things haven't changed in the past 100 years. It's the same as it used to be. It's still the same as it is. Anti-PC, happy Valentine's Day to all the fine gentlemen in this chat today. There you go. How about that? Welcome, Anti-PC, to the show. Happy Valentine's Day from Larry Titus. Very well done. Well done, Larry. Welcome to the show. Nice to have you all here. Welcome to the markets, pal, says Nazareth. AMC earnings are March 9th, apparently. So that's still a ways. I thought I had read something. It was this week. I thought I had read somewhere it was going to be this week. So maybe I'm mistaken, or whoever it was. I don't know. Anyway, let's see what's going on. Thank you all for being here. So good to have you all here. And let's see. Hope you enjoyed the Super Bowl yesterday. That was an interesting game. We always love thrilling endings and so on. It's all good. Thanks, Auntie, says Splair. Happy Valentine's Day, too. There you go. Yeah. Oh, interesting. Interesting comments coming through here. Welcome one, welcome all. The Dow right now down 140. We've got Rocket Lab off 20 cents. SoFi down just 9. The volume on SoFi right now, 8.3 million to sort of start the day off. And we'll see how this all plays out. GameStop 124.03, down 22 centinos on 174,000. Not a lot of volume. The low is 122. The high 125. Here we are at 124.03 right now. AMC up 1 penny, so that's helping keep GameStop around here. We've traded 3.7 million on AMC. Not all that heavy to start the day. Matterport 785 down 2 cents. AMC just went red, by the way. It's now down a nickel. ME down a half a penny. Spire down 11 cents. ATIP off 3 cents to 277. Smart Rent at 8.95, up 27 cents, going back up again. And the Sextera unchanged at 11.29. So there's a little bit of activity there. Facebook's green, buck higher, and Google is green, up $7. So a couple of green spots, not too many, but a couple. The Dow now down 75. This is not a sell everything as fast as you can kind of market. That's not the situation at all. SP's green, plus a quarter of a point, and Nasdaq is up 21. So the markets have actually turned positive, and the Dow is being dragged back to break even right now by the rest of the market. So we'll see how that's going to go. GameStop just went green, 125 a share, up 75 cents. And AMC gone green again, 1887. So AMC is now at 1887, which is below the high of the day of 1914. That was the high this morning. 4 million on AMC now, and GameStop at 124.90, up 65 cents. The high of the day, 125.22. I think we had just touched that a moment ago. 198,000 volume on GameStop. There is no sell wall coming in on GameStop. So obviously, in my in my professional guess, uh, there's buying interest in GameStop, but the buying interest doesn't seem to want to run the market. It just seems to want to accumulate the market. I just get the vibe that there's buying interest in GameStop that won't have just where the stock just isn't backing off. The Dow can be down, the Dow and the S&P and that they could all be down. Nasdaq, all of it could be negative, and GameStop just isn't giving up ground right now, and that's just telling me that there seems to be a very determined acquirer of stock slowly but surely buying up GameStop in blotches and splotches and bits and pieces without appearing to be desperate to buy it. The sellers have no problem getting out. You want out of GameStop? Offer it up, and it's being bought up by somebody. And whether that is a brokerage house buying in a customer on a forced buy-in on a short sale that's not working out, or whether it's a hedge fund that shorted a whole bunch of GameStop. Might have been shorted over the last 6 months, a year. They're sitting on 5-10 million shorts. They need to be covered. And for the last 3-4 days, the the employee of the brokerage firm, or the pro in the and I'm hoping that is a professional inside the hedge fund, has been told by management, we're getting out for the next month. We want you to get us out, and we want to be flat and even. And so there's a trader over at a hedge fund who has instructions to buy up 10 million shares, let's say, a number of that significance of GameStop, buy up 10 million shares. Don't let the world know you're doing it. And so he's using, or they're using 2 or 3 or 5 or 7 or 8 different brokerage firms at the same time. And they're slowly but surely buying up stock in small increments all over the place. And at the end of the day, they go, okay, we bought another 50,000 today, or we bought 85,000 shares today. We bought 170,000 shares today. They're slowly buying up this paper in blobs, in chunks, without any one of us knowing that that's what they're up to. Even right now, it's down $1.25 right now at $123 a share. And these buyers are going, yeah, we're buyers, but we're not going to show a bid of 1 million shares. No way. We're going to let the market free trade, and then whenever it settles out somewhere, we'll just nibble up. Now, it's 122.80 down 145, and AMC just went red. It's negative 39 cents on AMC. These buyers could be going, oh, this is great. There's stock coming in. It's backing off. We'll back off, because the lower we buy this stuff for, the more money our hedge fund makes, because we're covering a short position. So we'd love to buy it cheaper rather than higher. So why are we going to get in the way of this market? Let the sellers come in and feel like there's no help. And then down here at 122.72 or lower, we'll nibble it up. And that could well be the plan. Because it just the last couple of days, GameStop just has not given up ground like it normally would give up. That's just this old man speculating that might be going up. Let's see if the lamp works, okay? Let's see if I can get my spotlight to come back on. I'm not sure if the plug is cooled off. Yeah, it's cooled off. See this thing here? It's the old Apple thing, and then you plug this into here, and you plug this into the power bar. And let me tell you, this little box gets hot. Let's see if I can get my lamp to come on. Are you ready? Ho! How long will it last? I don't know. I paid $15 for this lamp, which will not come back to Calgary with me. So, it has a limited lifespan in any event. But I'd kind of appreciate if it would just stay on for the few hours I'm on the air. That's just me asking. I'm just being hopeful. Anyway, kids, there you have it. We're watching what's going on here on the markets as a whole, the world as a whole. The Dow now is off 220 points. So we now are decidedly lighter. We're down 14 on S&P. We have gone red. And the NASDAQ is still showing a 7-point gain, but it's given up all the gains to where it's more or less flat. GameStop is 122.80 down a buck 45, and that is the problem. The Dow loses 230 points, and GameStop is down a buck and a half. It's instead of $7. It's kind of interesting. AMC is off 24 cents, yeah, but not down to $16. 1857 last trade on AMC. The low on AMC 1840. We traded 5.8 million volume on AMC. GameStop now 122.74. The low of 122.10. 255,000 volume. We don't have a million shares of selling coming in here, so that's good for the longers. Rocket Lab is down 8 cents. SoFi is down 2 cents. Matterport green up 15 cents, and ME is green up 14 cents. So Matterport's at 801, ME is at 466. Spire is off 11, and ATIP is up 1, and SmartRent is up 32 cents to $9, along with the Sextera up 9 cents to 11.38. So we have some recoveries showing there. Robinhood up 20 cents. Vanik is up 3.37, the computer chip makers. Home Depot down a buck 49. IBM down $2 to 130.50. Microsoft off 144. Apple down 48 cents. Goldman down $1.74 to 361. Cisco down $1.14. Facebook is up 45 cents to $220. Amazon is down $4.92. Tesla's up $8.51. Google up $5.70. Bed Bath Beyond back to $16, up 31 cents. BlackBerry up a nickel, $7.10. Royal Caribbean up $1.60 to 85.56. There you go. There's some of our faves. The Dow right now down 198, and S&P down 9.3, and Nasdaq down 31. There was a release of some info. Some info came out this morning. It was another one of these polls that I found really interesting. It happened to be a poll of workers who are white-collar job workers, people that work in offices. Okay, I don't know where this poll was taken. As far as it's a U.S.-based poll, I don't know where in the U.S. Was it a national? Was it regional? I don't have that. But apparently, the results were. The people who did this poll released some really interesting information. They said that only 3% of all white-collar workers were interested in returning back to the office. For those who've been told to work from home and have been now working from home for, in some cases, now approaching soon to be 2 years, only 3% are interested in full-time work back at the office. Just 3%. It's to the point where respondents of this poll are saying, if my boss calls me up and says, you have to be back in the office full-time starting 2 weeks from now or a month from now, whatever, we're opening up the office again and you must come back, 97% are saying, I'm quitting my job. I'm not coming back. I am interested in working for the company, they're saying, a majority are, and I'm willing to negotiate the terms of continuing to work for the company. But as far as I'm concerned, maybe I might go into the office 2 days a week. Even then, I don't even want to do that. It is shocking, the numbers that are coming out from these studies. And it is now apparent as to why is it that every month 4 to 4.5 million Americans are quitting their jobs. They're not getting any deals from their employer. They're not getting concessions from their employers. They're either not getting a raise to counteract inflation. They're not getting a raise for their loyalty to the company in the last 2 years under dire conditions, working from home and still delivering their numbers. They're being told that they have to come back to work to the office, and they're not They're not coming back, and employers are scrambling now to replace these people. And what they're finding, of course, is what we've talked about, that to replace someone with 10 years experience who's now 40 or 45 years of age, you're talking a 10-year plus experience veteran at the same money you're paying that person, can't be done. You can find a rookie. Yeah, you can find a recent college graduate or someone who's been working for 2 or 3 years over here. Maybe get them to come to you, but you're going to pay them a higher starting wage than you would have thought that you would ever have paid 2 years ago. Because again, everyone else is offering higher starting wages as it is. These folks who are quitting, they're not quitting naked. They're not quitting and then trying to find a job. They found another job and now they're saying goodbye to their employers. They have been either approached by headhunters or have had friends and fellow coworkers and others over the months and months and months say to them, "Hey, I hear so and so is hiring. You know that job you're doing? That job you're doing pays way more over there." And people are checking it out, and they're shocked at these offers that some folks are getting, 10% offers, but others are getting 30, 40, 50% more than they're getting now to switch, and can work from home. Whatever, no problem at all. We'd love to have you work. No problem working from home with our corporation. They go back to their existing employers and have a chat with their supervisors, and the supervisor, they mentioned the supervisor, what's the future look like with the office, and are we looking at any raises coming up because of inflation now being at 7% for several months in a row? What's the status? And the supervisor says, "Let me get back to you." Supervisor calls back a couple days later, a week later, and says, "Yeah, we're talking about going back to work for March 1 or March 15 or April 1 or April 15. And yeah, we're looking at raises that are like 4 or 5%. And the employee says, "Well, I have an offer, to move on substantially higher, and I can stay here at home, which is where I prefer." And the supervisor said, "Let me make a call. Let me get back to. Let me get back." And then an hour, 2 hours later, they call back and said, "There's nothing I can do. I can't give you anything more. You have to come back to the cubicle, and maximum is 5% raise." And they say, "Well, I'll get back to you." And then, like in a half an hour later, they send an email resigning, saying, "I'm out of here. Here's my 2 weeks notice. I'm gone." It was nice, nice 10 years with you, 15 years. Great being with you all these years. A lot of employees, of course, have been looking at their 401ks and trying to figure out, when can I leave? When and how should I quit to maximize my benefits that I can take with me elsewhere? And, what's my healthcare situation? Of course, employers know that if you want to steal someone from somewhere else, you better out benefit the existing company with better benefits. Because sometimes it isn't necessarily just the pay packet that is going to drive them out. It's the medical and retirement benefits and holiday benefits and stress leave and stuff like advancement programs. Like, show me a reason why I want to go to your company and work out of this cubicle, or, work out of my house for you guys. And the company says, "We guarantee that within 2 years, you will be upgraded to a higher pay grade." No question about it, because you're going to be at a higher executive level. We're not interested in hiring you because you're at a low-level employee that's going to grunt out your earnings. No, we want you to be part of the middle team and the upper middle, the senior team. We want you to be a team leader here, and we're backing it up. We're paying you now a much higher pay than you're getting, and you're going to have much higher benefits because of it. And 2 years from now, you'll be here. This is where we estimate you to be in 2 years. 5 years, you could be here. It's all up to you if you want to go there. This is the kind of stuff people want to hear. This is what they want to have offered to them to motivate them to say, "Yeah, this is what I wish my existing employer would do." But I'm not getting that because I'm not I'm not going drinking with the boss on Friday nights. I don't like going out to the party scene and the bar scene with these guys. I don't want to be that person. I want to just, I want to be moved up on my merits, not on my, congeniality awards. I'm not interested in drinking my way to the top. I'm interested in delivering results to the top so that it's honestly earned with my efforts. If they're not going to, they're going to bypass me and bring along others that I know are inferior to the kind of work I believe in doing, I'm out of here. And that's what's going on. It's amazing what's happening. Anyway, that was an interesting study. It came out that, I gotta say, 3%, only 3% are saying, oh, yeah, whenever they want me back, I'll go back. No problem. Everything's fine. Yep, can't wait. That's not the case. By the way, SoFi's up 11 cents right now to 12.51. GameStop is 122.51 down 174. AMC is now positive. It's up 29 cents. AMC's at 19.10, which is off the high of the day of 1936, but up. And AMC is now traded 8.5 million in just short of a half an hour, but that's still down from last week. We did have 26 million in the first hour last week, Thursday or Wednesday, so we're down. GameStop at 122.62 is off 163 on 334,000 volume. So some stock is coming in for sale on GameStop. It's off 163. Matterport's up a quarter, 8.12. ME is up 14 to 466 now. Spire's only off 6 cents to 319. ATIP is up 1.25. Is up 2.5 cents, pardon me, to 282.5. SmartRent up 33 and Cyxtera up 9 cents. So we got more green than red. The Dow's down 157. Rocket Lab is plus a penny. SoFi 17 cents to the good. GameStop still down a buck. The SoFi hit a high of 12.67 10 minutes ago. We're at 12.56. We're 11 cents below the high of the day, but 14.5 million on SoFi. There's buying here. This football game, I don't know what to make of it for SoFi. I don't know if this Super Bowl, the Super Bowl didn't hurt SoFi. It's not hurting the company in any way, shape, or form. What will help SoFi and what will drive SoFi is its corporate results, growth curve, cash flows. The bank charter didn't hurt. It's helping. How much of their loans will be self-financed rather than financed through other banks. That conversion, that shift over is well underway, I am sure. And I think the company is dying to talk about this, dying to say to the market, here's what's going to happen. Here's what we think is coming up. And we'll follow that, what's going on, okay? Anyway, laugh out loud. Did Uncle Bruce just suggest that with the option money we could be making, that we'll be hypothetically turning into pimps, dressing up like pimps and really looking to, guys, come on. This is the way of the future right here. This is what you're shooting for. This is the kind of look that says to the world, baby, I made it. I follow Uncle Bruce on his channel. And this is in plain English telling the world, baby, yeah, man, I am a man about town. And if you want to join the winners, this is the look of 2022 right here. Don't go thinking this is some kind of a Seinfeld thing. This is the way, babes. Woohoo! Yeah, man, you got to love that. That's kind of exciting, don't you think? I mean, hey, you can make that kind of money to afford that kind of outfit. That's pretty good. I think so. Anyway, that's what I'm saying. Anyway, there you go. Welcome everybody. Yeah, here I didn't see any SoFi ads at all, says Nacho Concern. That was a giant mistake by SoFi marketing. Why wouldn't they flood it with SoFi ads? Well, apparently a 30-second ad was $7 million. And I gotta wonder, do you really want to spend $7 million, say 4 times, 28 million, when you've got your name on the stadium as it is? I don't know why you need to spend any more than that. I would think that the 20 million they're spending now, they're spending 20 million a year on naming rights. They're more than getting the promotion of that building out of there. And now they are home to the Super Bowl champions. So SoFi Stadium is home to the defending Super Bowl champions for the next year. This is a whole bunch of millions of free advertising yet again. I don't know. I will see how it all works out. Yeah. Anyway, I don't know. I don't know. I don't know. The beatings will continue till morale improves. There you go. Uh, oh man. What else is going on? Yeah, SoFi chose TikTok and Tweet to promote, and I think you get way more bang for the dollar doing that because where are your customers coming from? Online. That's where your customers are coming from because you're an online fintech entity. I think that's the way to go. We're going negative again. We're down 296 on the Dow, and GameStop is now at the low of the day, about there, 120.24, actually 119.82. SoFi, I mean, GameStop is finally acting like GameStop can act. We're at $119.82, down 443 on 394,000. We're backing up on GameStop here. AMC, it's 1874, down only 7 cents on 9.6 million, but it is definitely negative. The Dow off 289, the S&P off 23 points, and Nasdaq down 12. And again, there's been talk about, there was speculation this morning that things are a little better sounding in Ukraine, and I'm sure it'll go back and forth, but then nonetheless. Swiss Buddha saying, I applied for a SoFi credit card and I got denied. I have perfect credit, so I called the customer service. They were like, "Oh well, sucks for you." I pulled my money in SoFi, canceled my account because of that. SoFi is screwing up already. So there you go. Nacho Concern says to Swiss Butter, right? I didn't bother to apply for one because the SoFi offer sucked. End of story. It just sucked. And there you go. What lamp is there? Is there a lamp? The lamp ain't the problem. There's no problem with the lamp. I just got out of Ford $12 covered calls to get into SoFi. I gave up thousands of potential gains to follow SoFi straight into the shitter, says Swiss Bun. Well, the good news is SoFi should be at its bottom now, says Swiss. And yep, we talked about this. Andy is repeating here. Keefe, Briette, and Woods initiates coverage on SmartRent with an outperform rating and a price target of $13. Exactly. SmartRent with a $13 target. It is right now $9.82. So there be upside in them there hills, and that would be nice. Andy thinks the bottom will be $10, $11 on SoFi. That's what she thinks. We're at $12.38 right now on SoFi, off 1 penny. 298 the drop on the Dow right now, 24.25 on S&P, and there goes my lamp again. As you can tell, I'm having all kinds of problems with this lamp. It's burning out on me, and it just can't handle the heat. Can't handle the heat. It's got to get out of the kitchen. I'll tell you that right now. We've got a real hot plug-in over there. Yeesh, it's not good. GameStop 120.78 down 347. SoFi unchanged at 12.40. We have AMC at 18.64 down 17 cents. Matterport is up 11 cents to 7.98. ME up 11.5 to 4.63.5. We have Spire down 10 cents. ATIP down 1 penny. SmartRent up 21 cents to 8.89, and Sextera is up 2 pennies, 11.31 are early indications. We're down 300 on the Dow. We're going to see how long this sell-off lasts. If we don't go down 700-800 points, we could have an update today. If this sucker in the next hour starts recovering, we might be up on the day, because the Ukraine thing has got to get serious quickly to scare the markets any further. The markets are going, okay, the Russian troops are on the border. We know this. We've known this for a month and a half. The American military satellites have been issuing public photos of this stuff, which I think is a brilliant move. I have to hand it to the Pentagon and the U.S. administration. I got to hand it to these guys. Show Russian troop positions to the world. There ain't no surprise from Putin here. They've cut him off on the surprise department. If Putin figured he could move into Ukraine without anybody noticing until it's too late, No, we already know he's massed troops all over the place, and he's done war games in Belarus, and he's doing naval exercises in the Black Sea, and he's pulling all kinds of military maneuvers. Well, that's being shown off to the Western media through the U.S. Pentagon. No surprise move, no sneak attack going to be allowed here. Now you want to invade? That's a smart move, really, from a PR point of view. Anyway, there you have it. Let's see what happens here. Matterport on the run, says Fitz. Keller. Um, let's see. Oh, I see. Coyote is saying here, I am contracting for a company who refuses to do work from home arrangements. Refusing. They lose so many employees, it's insane. And our metrics show 80% of applicants quit the application process when they learn that it's not that there is no work from home. The only people wanting to go back to the office are middle managers who have been exposed by having very little actual use in the work from home environment. That's really interesting. I was approached by a company that a former manager left for this past year. They wanted me to come to work for them also, but I told them I would only if it was work from home. They agreed. Is that something? There you have it. That's the thing that's going on here. Really interesting. Let's see here. Here we go. China and Hong Kong-based residential real estate company Midland Holdings to digitize its property portfolio with Matterport. That could be an interesting contract. Matterport is up 22 cents to 809 right now. The Dow is down 278. Rocket Lab is up a nickel. SoFi is up 11 cents. GameStop 119.79. Down 446. It looks like this might be around the low. 119.73 is the low of the day on GameStop, and that's where we are right now, down 452. And so those of you who have rolled over your contracts, you were able to step up a little bit, go from 100s to 105s, or 105s to 110s, or 110s to 115s to 120s. The stock is coming to you, and let it keep coming. It could go a ways yet. Let's see. What else is going on here? Yep, Coyote. The only true raise these days is leaving and going to another company. That's it. There you go. What's going on? Well, yeah, here you go. Hey, Uncle Bruce, I can answer. I can answer your thing about why SoFi didn't have any commercials. NBC wanted 7 million per commercial for each spot, and pegged 7 additional million to be distributed throughout the year for more commercials. So NBC wanted 7 million now, and commitments for another 7 million over the next calendar year. And that's interesting. Reports indicate SoFi contracted 30 million for 20 years for naming rights, thus no ads. There you go. Eric is saying to me, Bruce, I am thumbs up number 287 for you, even though your lamp is fritzing out. I'm still, thank you so much, Bob. Eric, Bobby, 14 million for one ad when your name is on interview in the background. There you go. Credits average. Anthony Noto decided to say no and said that he'd rather have a TikTok campaign marketing where we pay influencers and reach a worldwide audience and have 5 billion views rather than 100 million views. I can see that. I can absolutely understand it. Makes sense to me. Unreal. Wavy gravy. Wow, that GameStop just went under 120. It's been at 119, 120 all morning. Yeah. 15 million traded on SoFi, up 20 cents now to 1260. I got 17.29 million. We're up 20 cents on SoFi. And away we go. The Weather Channel had an interesting segment on how the stadium was built. I think I saw that 3 times. I want that Uncle Bruce pimp jacket, says Nacho Concern. There you go. Not only was it $7 million for the commercial, they had to spend that same amount over the next 12 months. They chose to spend their 14 million elsewhere. Smart call. It's a nothing burger, says Bama Babe. I like the SoFi logo and their commercial. Switch to candle light, Uncle Bruce. It's February 14th after all, so it's a more of a romantic mood if you have candles. So you don't need the spotlight on, Bruce. You're fine. That jacket must have been how he picked up his jen. I'm not giving away trade secrets here. Mr. Dr. Dodi Doo. Oh, I can't even pronounce it anymore. It sounds like you are not using the right outlet adapter for that lamp, or the adapter has gone bad. It's very possible. I'll tell you, I have another adapter. I've got this one right here. This is one of these fancy dancy Cal Digit guys, you see, and you have a cable you plug into your Apple computer, and then in the back here you see all these adapters. See, you can put wire connections, and do all these. So I plug in the old lamp, this guy right here, into this guy over here, and I plug it in the computer. All I get is a flash. The light won't stay on. It doesn't work. It's a piece of garbage. The lamp is a piece of crap. It's anyway. Hot plug-in, that is not a nothing burger. You ought to get that checked out. It sounds like you have too many outlets in the same breaker there, Uncle B. And you could be right. It could be that there's just all kinds of issues around here. I'm a renter, man, and I'm out of here in like 15 days. We're out of here. 14 days, we're out of here. So, we're not going to spend any more money to make any other changes. We got to move on. Anyway, there it is. Zed Estate says to NTPC, I think your SoFi prediction is correct. Beach Boy, our housekeeper caught me, off guard and asked for 20% more money. I found someone who wanted even more. Others, unacceptable. Tail between my legs, got back to the first one. She gets what she asked for, 20% more, because there's no other way. I have 120 GameStop. I have a 120 GameStop to expire this Friday. Do we roll or do we wait? There you go. Well, I think you wait. The stock is at 120.93. I don't see it going anywhere unless the company talks, and they're not talking. So stick around. Ukraine is not weak. Austin, the commercial sucked. Halftime show took me back to high school. That was cool. Bobby, send Noto your resume as an influencer, Bruce. Kareem, jumped out of my 135 on GameStop thanks to the dip. Well, there you go, Kareem. Way to go. Noto knows where to find me. Mr. Noto, as an S&P, well, not an S&P 500 guy, but as a pro, he knows I'm here, and I'm sure he has people who watch me every day. Talk. Hang on, I'm going to try this light again. Here we go. We're going to change. We're going to blow up the house. Here we go. Yay! We're back. For how long? I don't know. They know where I am. I'm right here. You want to offer me $10,000 a show to promote your stock? I can do that. Hi, Jen.
Hi. You don't do that.
I don't do that?
No, you don't.
I don't promote stock for $10,000 a show?
No.
I might start $10,000 a show.
And what have you done to yourself?
Oh, I'm a mess.
What did you do?
I
have a coffee instead?
I got problems. I'm blabbering all over the place. I'm probably bleeding in my shirt.
Are you having a bad Monday?
I'm giving everything to the channel I can give, and
Oh, dear.
So how you doing, Jen?
I'm good. How are you?
Good. What did you think of the Super Bowl yesterday? You watched everything.
I did. I was really happy with it, that there weren't a lot of offsides or legal procedures, that they were doing really well. And then they had that face masking penalty that they never called, where he went on and scored a touchdown. And I thought, well, there goes the game. There it is. They have every eyeball in the world watching it. They have all these people supposedly in New York watching it on all those screens, and nobody could see that.
I was under the impression, and again, this is just, I'm being sarcastic in a way, but every scoring play is reviewed.
Yeah.
What I don't understand is, why can't the review call that penalty?
Exactly.
Because if a scoring play is to be reviewed, it should be reviewed from every possible angle, including penalties. You've got cameras all over the field. Right. The NFL has, 20 cameras at all times on plays. That clearly was a call. that would have
Well, and
negated it.
they say they don't want to take the game out of the, the boots on the ground guys. They don't want to do that. But if I'm the referee, I would rather have it immediately corrected and the game proceed,
Yeah.
knowing you made the right call,
Yeah.
than to possibly face. Imagine if there was no more scoring after that, and now the Bengals have won. You want the asterisk beside your win, saying you only won because they didn't call it.
Right.
Do you want to be the ref who will never ref another Super Bowl game because your crew blew it?
See?
Right? Like nobody wins by
Nobody
not
wins.
having the correct call. And then they made the makeup call.
They made the makeup call at the end of the game. When that
It's like, oh my
on the 3-yard line, there was that interference call.
Yeah.
With a minute to go, that was a makeup
It
call.
was a makeup call.
Because
Hockey's famous for it.
even the color commentator Chris Collinsworth said, "That's kind of
It's an iffy.
that's an iffy one." Yeah, well, that's a makeup call, Chris. Without you saying it,
Yeah.
we know you can't say it.
Yeah.
Yeah, we all know this.
But otherwise,
Very
I thought
entertaining
the
game.
game was very entertaining. Both quarterbacks got injured. It's like, oh my God, no, what's going to happen?
Yeah,
And SoFi Stadium, oh my
Beautiful
gosh,
place.
Beautiful.
Gorgeous.
Just beautiful.
I heard that there are parking nightmares with respect to SoFi, and
Parking's an issue for a building? I've never heard that before. Sorry. You were saying?
Since 1976. I'm used to this, okay. But wouldn't you think that with all the zoning rules and all the building codes and the realization that, we have upwards of 80,000 seats in this building, that, LA being a city of freeways and highways and the car is king.
Single occupant cars.
You would think that you'd have enough parking available to handle the possible 35,000 fans that are arriving by vehicle. The other 45 are coming in however they're coming in. Buses and I don't know what.
I'm sure they put in every parking spot that the municipality required of them.
And which is enough.
They work on an algorithm of this many bodies, this many buses, this many trains.
All right.
Yeah.
Now here's what I wanted to mention. I saw an article the other day talking about how much it costs to park your car in the area, in the neighborhood around that area where there are people with homes still.
Oh Lord, yeah.
$200 to park your car. Cash. Yeah. $200 to park your car.
Yeah.
Because you can't get parking at the stadium.
Right.
Sold out.
And they get there so early.
Ridiculous.
They get there the night before to set up for their tailgate parties.
If they even have that, and how and what and where.
Yeah.
It's ridiculous. In Phoenix, when we went to see Glendale, we went to see the Steelers visit the Arizona Cardinals back in 2016 or something.
Yeah.
Parking was $10.
Yeah.
If that. And you could easily walk to the stadium.
And it was beautiful.
And then they had a beautiful
big
tailgate
grassy
thing.
area.
They did it right, but they had the real estate dedicated for not only parking for the stadium, but then they also had. Well, I think parking was free because the parking also was for the shopping mall, which is part of the complex. So it was free parking, period.
I think so.
And the fans came.
But they have the space.
They do, and Inglewood, you would have thought they would have built a multi-level parkade on that massive footprint of space. It used to be a racetrack. This whole area used to be Hollywood, the Hollywood track, or whatever they called it, Hollywood, whatever it was called. But no, $200 to park your car on private property next to
it. And just ridiculous amounts of money for the tickets.
Yeah, and I say to the homeowner, congratulations, if you can pull off this kind of money.
Yeah.
Renting your backyard to 10 cars, and the side of your house. I mean, you could squeeze 10 cars on your house lot for $2,000 cash for a game. Way to go. That'll go a ways to pay your property taxes.
Yeah. Yeah.
Yeah. Unbelievable.
We used to live close to McMahon Stadium, which is where the Calgary Stampeders play football.
CFL, Canadian Football League.
And every game, people would park in front of our house. And my father would be out there standing in front of the driveway saying, "You can park in front of my house, but you can't park in front of my driveway." And every game they would try to do that.
They would try to park in his driveway.
And it was fun. We would just sit outside and listen to the game so you could hear it.
Yeah, because you could hear it it's just over
It's
there.
just over there.
You could hear the crowd.
Hear the concerts. Yeah.
Put the radio on and listen to the play-by-play. And hear
Did
the
you go to
crowd.
the concert? No, but I heard it.
I heard it. It was just over there.
It's like the people who live close to Indian Wells.
An outdoor venue,
Yeah.
which it still is. We're down 305 points at the moment, hanging around this level.
Okay.
We don't seem to be going much lower, but we're hanging around. I think we did touch 350 for the low. But we're plus on Rocket Lab. We're plus on SoFi. 6 cents Rocket Lab,
Well,
5
if
cents
it
SoFi.
holds true, SoFi should be up this week, just
Yeah.
like all those ads. Hey, what do people think of the commercials?
Well, we're talking here about there were no SoFi commercials on the telecast.
No, there were not.
And here's the story. Apparently, if you bought an ad yesterday for
Mhm.
$7 million,
Yeah.
you also had to commit a $7 million ad buy campaign for the rest of the year
Oh,
to be able to buy an ad.
really?
Yeah. So NBC was scoring $14 million for an ad minimum in total revenue by selling it $1 million.
Isn't that interesting? And you look at all of the ads that were for NBC itself.
Oh, Peacock, yeah,
That
yeah.
you
You
know,
wonder how
have
many
that
ads they
balancing.
didn't sell. How
Right,
many
yes,
how
that
many ads
playoff.
didn't they sell to the outside world that they could
Right.
have sold?
How many?
So they
yeah.
had to use their own.
When you're thinking that costs $14 million.
Yeah, well,
the
Peacock.
7 plus the 7.
Yeah, but the Peacock, they're not charging themselves.
No,
That's
no,
their own
no.
network.
So yeah, it's yeah.
I wonder if there could have been 10 or 20 more commercials had they not had
You
that
know,
deal.
I enjoyed the commercials. I thought
but-
they were pretty good yesterday.
Oh, there were some good ones. There were some enjoyable ones.
There's
Some
still
kind of
some where you're like,
What was that?
I don't know what that has to do with the product.
Why is that like that? Yeah, we wonder. GameStop, by the way, 118.97 a moment ago.
Mhm.
The low of the day now on GameStop, 118.50.
Oh,
But we're 119.09 right now, down 5.16 a share on GameStop. We're down 7 cents on AMC. So AMC's relatively okay performance is not helping GameStop. GameStop is definitely off this morning.
well, it had its own little run last week. So.
It tried to hit
Well,
130.
AMC had a little run last week as well.
Yeah, well, got to almost to 21. Yeah. We
So-
got some sesame seed bagels finally.
Yes.
I was able to score some sesame seed bagels. So I am looking for the grape jelly on a bagel, but
jelly.
if you could make sure it's well toasted.
I
for
will
me.
make those sesame seeds pop.
Pop! Yeah, baby. Thank you,
And I'll
Miss
see you in
Jen.
like half an hour.
I'll see an hour. Yeah. I'll be starving in the meantime. Anyway, there you go. Whatever. Z Estate says SoFi trades at a book value of $5.30. That could be the floor for the stock. However, JP Morgan and other big banks traded around 1.5 times the book value. And hence a realistic floor value. This is NTPC saying a realistic floor value for SoFi could be 5.3 times 1.5 equals 8. However, SoFi also has a Galileo business segment that should be valued as a standalone company, as an SaaS company, and a SoFi money segment as well. With revenue of $200 million a year that is growing at 80 to 100% and a margin of greater than 80%, a PS ratio of 10 is a decent multiple, and hence Galileo should alone be worth $2 billion. Hence, I believe the floor for SoFi should be about 10 to 11 with a lot of upside. Very well done, NTPC. Thank you for breaking that down for us. Coinbase QR code, just scroll across the TV screen. 14 million, well spent. Laugh out loud. Mr. Doctor, that is not going to provide adequate power, Uncle Bruce. Your computer will not power it. There you see. This is interesting. Nacho didn't realize it was plugged into the PC. Sorry, no, I'm plugged directly into a power bar on that little box, that little thing. I can't even power into the computer. The computer's plugged in, and then from there it doesn't work. So I'm direct into Power Direct, and the entire 3 months I was at the other condo, I really had no issues with the light. The light was always on, it would stay on for hours. But lately, after about 10, 20, 30 minutes, this lamp cuts out. The heat's too much on the power box. Maybe it's an issue with the little thing. Uncle Bruce, if I remember correctly, you say to roll on strength, not on a dip. Can you talk about why you want to roll on strength and not on weakness? Well, what I'm looking for is I want a stock to. Sorry, let me rephrase this. What I'm looking at is a lot of you are wanting to write options that are 1 to 2 to 3 weeks in length or less. Like in that range, right? You don't want to write longer than 3 weeks from now. Most of you like to write for this Friday or next Friday because you want to write a call for, whatever amount. And then if it drops 40, 50, 60%, you want to cover up. And so to do that, you need an option that will drop relatively quickly. And an option that drops quickly is one where it doesn't have a lot of time left in it. So 15 trading days or less, hence the 3-week rule, because there's 5 trading days every week. And a scenario where if a stock has had a positive run, it might be in line for a little bit of a profit taking. And so if you see a stock pop up today, it's like say this morning, had GameStop gone from, where it left off last week, this 124 range, had it gone up to 129 first thing this morning, I would have been screaming at you to write 130s for this Friday, 132s, 135s, or 135s for next Friday. Now with the drop down to 119, you would be able to buy back these 130s, 133s, 135s for probably half the price you wrote them for. That's what I'm saying. Now, at the moment, I'm watching GameStop at 118.96, and my attitude on this stock is dropping where it should have dropped on Friday but didn't, or even on Thursday and didn't, where it attempted to hit 130 and go beyond that. So finally, we're backing off from those levels to this level, and even this level is suspect in my opinion. I think this stock should be testing the 115 level down to the 110. Now, if that were to happen today, then a bunch of you out there who are sitting on now contracts that you rolled into that could well be 105s, 110s, 115s, and 120s, you are looking at contracts that will have dropped significantly from where you placed your sell order at on Friday or Thursday last week. So I'm hopeful that a bunch of you out there are sitting on call options that were at one time, maybe they were $18 to $25 each, and now quickly they're going to drop into the, let's hope, $5 to $10 neighborhood if the stock gives us a little more downside. That will make buying up these contracts a lot more palatable, although you don't have to do anything today, being just Monday. We may find that we have Monday and Tuesday and Wednesday, we go back to 105 on GameStop. A lot of you will be able to make money on your buybacks or pretty well break even on your buybacks with your stock still at 110 when it used to be at 95 to 100. And then we'll sit back for some strength and right again. So I look at Goldman Sachs and I look at Cisco and I look at Microsoft, I look at Apple, I look at all these other stocks where you are doing, let's say, poor man covered calls. I look at those issues and I go, okay, well, if these guys want to improve for you and put some strength on, then you can sell into that and achieve this 15 trading day or less strategy of either one, the stock, having moved a little and now just sort of slumping a bit, allowing contracts to shrink out with time, and or plan B, not only time shrinks them, but a little pullback on the price will shrink them as well. I look for both of those. So that's what I talked about, selling into strength. All right. Let's see what else is going on here. Let's go. Yeah, this is funny. Clay, yeah. You remember when we used to complain that the Super Bowl halftime show we got the Rolling Stones, Paul McCartney, for all those old folks. We are the old people now. Yes, you, the generation behind us. Now you're old. You're old. Welcome to the club. How does it feel? Yeah, and I'm looking at the artist yesterday. I'm going, oh man, I'm not old. I'm ancient. I'm not old. I'm ancient. Because I look at these guys and I'm going, oh my god, look how old these people are. These rappers and these artists, they're getting up there, and time is ugly and relentless and mean, and that's what happens. Yeah, yeah. What can I say? Let's see. Oh my gosh. Here we go. Meet Kevin is ending his YouTube channel again. Bye bye, says JJ. I know last week he talked about not doing the morning openings and the closing shows anymore. He's not going to do those two segments, but that he would just, do whatever. I'm not, I don't follow him because I'm here. I'm working here 3 hours in the morning and in the afternoon every day. So I don't understand every little nuance of his channel, but he's a successful YouTuber and a successful, businessman in a number with his fingers in a lot of pies at the same time. What is he, 29, 30 years of age? Energy like I don't have anymore. Way to go. Way to go, meet Kevin. Uh, yeah, maybe the NFL should hire Matterport, put in more cameras. There you go. Let's see here. 100,000 seats in SoFi Stadium, says What's Cooking Wendy. Wow. Uncle Bruce, Nick saying, I just wrote 100 SoFi March 4th for 73 cents. Good move, bad move. I just wrote 100 SoFi March 4. Good or bad move. Are they 15s, Nick? Or 14s? Are they or they're 14s? So you've written 100 calls, 14s on SoFi for March 4. So we're talking about the 18th, the 25th. That's 3 weeks out, right? 2 to 3 weeks out. So that's 15 days. It's an okay move. I mean, it's an okay move. It's a question of how much you want to get out of it, Nick. If you're looking for like a 20, 30, 40 cent flip, uh, it's a strategic trade. You have room here of at least dollar 20 before you need to worry about it. So, like I would say, to 13.50, you shouldn't have too much to worry about. Beyond that, you're going to keep an eye on it, as I know you will. The good news is that contract is probably very liquid and allows you to make these moves in and out quite easily. So yeah, more power to you. Let's see here. Yeah, Auntie likes it. I like it. Nice going. Let's go. Vilbus, I'm thumbs up number 309. Bruce, welcome. Thank you, Vilbus. I'm waiting for more dip to get out of my February 18, 113 on GameStop. Yeah, no rush. No rush. We're at 118.42, and it drops to 110. Maybe then it'll work for you. There's no hurry. AMC's off 33 cents. It's not like crashing, but it's not leading the way anymore. The Dow's off 321 and 118.35 right now on GameStop. I believe that is the low or about the low of the day. Yeah, 132, 118.22, and we're at 118.22 right now. This is the low of the day on GameStop, so we're down 604. Okay, Credit Savage. I am in San Francisco, Uncle Bruce, for the World Series when the Giants made it a few years back. People were selling access to their parking spots. Oh, you were in San Francisco. And they were selling access to the parking spot near the ballpark for the event for $400. Oh, my God. My God. Lame Duck, if you can afford a ticket to the game, you can afford $200 to park. Unbelievable. Sparky, I used to live near a convention center. I once sold a driveway parking spot for $5. I did it more for the story than the cash. Bobby, Canadian football is 110 yards. That's like real man's football. Yeah, well, 110 yards long and 63 yards wide or something like that. That's a lot of field. Kent, I'm sitting with 102s for this Friday. Right on. Nick, my thinking is SoFi wants to drop, then it's okay. I will keep the premium. And there you are, Nick. I hear you. JL, California Planning Commission's new. If one wants to get rich, get on the Planning Commission. Nick, I like that 1450 better, though. Obama, babe, Kent sitting on 110s for Feb 18. Right on, you guys. Lame duck. I park in people's yards at Wrigley Field before I have. Charlie Bruce, try a different power box. That one might be failing, and might be a fire hazard. Nacho, laugh aloud. Planes, trains, and auto. Surely someone who is willing to pay $200 for a parking spot would pay $300. Man, oh man. Screw NBC, says Auntie. Austin, I park wherever I want, whenever I want. There you go. Auntie says, I like NFL. Bobby, sure, Austin, but you cannot pick where they tow you. That's it. Let's see. I like NFL's ad. Bring down the house with the football players busting through the TV screen and playing football in the house. That was a lot of fun. John Gill. My daughter was in a Super Bowl commercial for the Botanist Dry Gin. That's awesome. Truck Dog, thank you for this donation. You accidentally shown Jen's face when she walked in. Oh, there you go. That was from Bazinga, by the way. I'm not sure. Coinbase had a very good nothing ad. Let's see. What else is going on here? Austin, anti-PC. Is SoFi 13 for this Friday for 33 cents a good deal? Selling a call. I would not be doing that. Cutting it close, says anti-PC. Better go for the 13.50. And even then, Jason, what was your favorite Super Bowl performance of all time? Uncle Bruce. Yeah, I'm the wrong guy to ask. I have to say though, Michael Jackson in 1987, 86, 87, was that the year? Or was it 88? Remember Michael Jackson was the halftime? I think that was pretty cool for its time. Anyway, that was it. Anyway, there you go. There you go. Nazareth, thank you, Nazareth, for this donation here. Thanks for the great answer, Uncle Bruce. Thank you, Nazareth, for this donation. I appreciate these. We're at 116.92, 116.92 on GameStop and falling. 116.74 now on GameStop, down 750. AMC at 1829, down 52. The Dow's down 358. Rocket Lab down 9. SoFi down 13. Matterport holding a 3-cent gain, but barely. ME is still up 22.5 cents to 474. Spire down 14. ATIP down 2.5 cents. Smart Rent up 15 cents, and Cyxtera up 3. GameStop is definitely giving up ground here. Finally, volume on that stock now is 726,000, still light. AMC at 1830 a share, down 51 cents, near the low of the day here. 15.5 million. That is light. We do not have the AMC volume we had even on Friday. It is light. So there's that. Okay. So GameStop could drop further. The 115 test might be coming up in the near future here. A little bounce here and there. It'll pop up, hop down, pop up. But we might be heading for 115 on the GameStop and be testing that to see what kind of support level it has. 117.25 at this moment in time, down $7. Dr. G, the captain of my high school football team, Carl Zander, played in the 1988 Super Bowl for the Bengals. Talk about feeling old. Oh my, Dr. G, after last week's 105s, I may need to buy my wife's flowers on margin. Lobo Blast, that Sopranos Chevy commercial really gave me the feels. Lame duck, I love Dolly, always been a fan. But even my wife says she looks bad. Michael Jackson was good too. That's my runner-up. The Jacksons had to be the most memorable Super Bowl halftime shows. Bruce, 1993, Michael Jackson was halftime entertainment. See, I've lost track of time. I thought he was way back when. Yeah, I have no idea. What can I say? How low do we think GameStop gets today? Would love to see 110. You never know. Gotta be the Prince. He even had the weather participate in the show. Let's see. I don't know, Uncle Bruce. Prince playing Purple Rain during the rain was the most awesome. Although yesterday was the best halftime show I'd ever seen. I liked Paul McCartney. I liked the Stones. I enjoyed who else am I thinking of over the years? I'm trying to remember. Gosh, you forget. I forget. I mean, they just blend into each other because it's just not a big part of my life anymore. That's the problem, or that's the reality. What can I say? You too. I remember. Yeah, that was pretty cool. You guys are bringing back memories by remembering these shows. Yeah, you too. Um, that was pretty cool. Yeah, they were at their height at that point. Um, what was the name of the group that came out of England? Um, Gosh darn it! They was it? There is it Coldplay? I can't remember the name. Is that the name of the group? They had just come up with a pretty cool hit, a pretty cool song. Uh, can't remember the name. You think I remember the title of it? No. Auntie, hey, look at Mama Babe looking like the haunt librarian. Looking good, Mama. Where's Mama Babe? There's Mama. Oh, Mama Babe. Oh, looking like the hot librarian. Oh, I like that look too. I like that. That's like the Tina Fey look. I like the Tina Fey look. You're good, Mama Babe. That shows how old I am. Peyton at the bowling alley. Pink Floyd. Yellow. Yes, Coldplay. Yeah, I enjoyed the Coldplay show. I enjoyed their musical selection. Don't forget Springsteen's halftime show. And Bama Babe, NTPC, you're the only one who gets my dry humor. Uh, awesome. I'm probably in the minority on this, but I'm not a Prince fan. He looks like Jafar from Aladdin. T Jack, hi Uncle Bruce. Number 331 looks like the next support level for GameStop to fall through. It's 114.18. It's 118.46 right now. Of course, girlfriend, says Auntie. Oh my, Canadian content, Black Eyed Peas. Janet just gave us an extra show. Eric, how could we not mention Janet Jackson's halftime order malfunction? Couldn't believe what I saw that day. Did you know? I found this interesting. I was listening to, actually, it was Jennifer. She was listening to a show on public radio on the weekend, and it was what's it called, Bruce? I'll ask her later. And it was all about significant events, Super Bowl history, from an advertising and marketing point of view. And they talked about the Janet Jackson episode with Justin Timberlake, and that when the incident happened, the historians have calculated that the amount of time that the exposure was something like less than a second. It was like a 3/4 of a second of time, and then it was covered up. After that happened, various news outlets commented on the event but didn't show it because obviously on network television you don't do that. So there was a scramble going on where those who missed the live presentation of the event wanted to see the event. And a couple of young guys, college kids, were trying to find out a way. How can we find a way to get this video? Where can we find this video and then allow people to see it whenever they want to see it? They can see this like you can see this video anytime you want, and it's like having a tube, like having the TV tube for your convenience. You can have the tube anytime you want it. YouTube. That began YouTube. That's how it started. That was where the germ of the idea came in about video on demand anytime you want to see it, so that you can share it. I can share this with somebody else. A YouTube, like a YouTube video. Thank you, Janet Jackson, for making my life what it is today. I appreciate it very, very much. How about that? And also Justin Timberlake. Thank you, Justin. How about that? Yeah, how could you not mention Janet Jackson's halftime order malfunction? Couldn't believe what I saw that day. There it is. It's been downhill for that since that. Anyway. What's the big deal? It's just a nipple. Isn't that a Seinfeld episode about nips? Thanks, Justin. Oh, but we saw it. See, fans only can see it. There you go. Nipplegate. I was watching with a friend and did she just Did I see what I just saw? Did we just see what we just saw? Was that really well, less than a second. Yeah, that's right. YouTube, baby. YouTube is where you can see it again and again and again and freeze frame it and everything else. How about that? The creation of YouTube. I still remember seeing my first YouTube video in 2005. It was a clip from the Notebook my middle school girlfriend posted on MySpace. I didn't care about the video. I found the site fascinating, right? So the nip slip started YouTube. Yep, that's what started. That was the germ of the idea that kind of, yeah, these guys, college guys thought, we've got to find it. If there's a way somehow we could upload if we could upload videos to a place that people then could go to and they could then share that and see that anytime they wanted, and that's how it kind of evolved out from this to what we have now. Something about Arola. I don't know what that means. I enjoyed the Larry David ad. Apparently, I have not seen that yet. That I'll catch up on later. I will eventually watch all the ads on YouTube. Hello, that's what I remember about YouTube as well as my early recollection. I had friends of mine who were and then relatives of mine who were talking about YouTube, and they said, well, if you want to watch the Super Bowl ads that you can't get in Canada, because in Canada, Canadian broadcasters cut in when the commercial breaks go on, and we just get Canadian commercials. We get 4 or 5 different commercials during the Super Bowl again and again and again and again. First quarter, second quarter, third quarter, fourth, where you guys get your Super Bowl ads. We don't. So we have to find another way to get them, and that is through YouTube. That's how we get to watch them. So I was exposed to YouTube that way. Before YouTube, we had like Newgrounds for vids. Wasn't a lot of choice. Bobby, nothing get college guys engaged in thinking outside the box like a slip nip. There you go. That was a great publicity stunt, Janet. Still talking about it for 20 years. The way she got raked through the coals by the conservative media at the time was awful, though. Coyote, I started my own YouTube channel in 2007. Ha ha ha. And Coyote, this one. And Bobby, yeah, Larry David ad was funny. Yeah, I started this obviously in 17, doing this in 2017 on my other channel, and in this channel in 2020, and now I started watching YouTube probably in whatever when it within the first few months of it, I sure was exposed to it. Certainly through my daughter, I was definitely exposed to it from her, because she would say, "Oh, Dad, you're gonna love this." I said, "Why would I like this?" Oh, she said, "You can watch videos on here. What song do you like?" "Oh, I love Beatles anything." So just type in Beatles, and then all of a sudden these Beatles songs were up on YouTube. Oh, this is fantastic. What about Rolling Stones? Oh, Rolling Stones. And then commercials, and then she'd say, "Oh, here's a funny video, Dad. Watch this one." And then away it went. From worldwide wardrobe malfunctions to homeless Canadian bagel commentary, you've come a long way, baby. That's right, YouTube. Taking this homeless Canadian, allowing him to rent a condo in Palm Desert and rent a Tesla on the side and talk to his fans around the world. Thank you, YouTube, so very much, allowing me to let the world in on what's going on out there. Oh, it's fantastic. We're down 319 on the Dow. Rocket Lab's up a nickel. SoFi's up 7 cents. GameStop down $4 to 120.25. AMC down 16 cents. Matterport is up 16. Now it's up 19 on Matterport to 806. ME up 32 cents, powering higher, 484. Spire down 9. ATIP down a penny. SmartRent up 26 to 894. Cyxtera 1140, up 11 cents. Robinhood up 20 cents to 1352, and Savanic up 294. I'm going to mention this one more time. I had a chat this weekend with a viewer of mine. It was a really great chat. It was a 1-hour private session, which I offer here. If you're interested in one, send me an email. I'll let you know when I can slip you in for another one. But we had a session this weekend, and he wanted to ask me all about options and writing options and how this worked, which a lot of you like to do on a one-on-one with me because we're uninterrupted and we can go deep into the discussion. And had a really good chat with him about writing options on different stocks. And I asked him, what he's got. And He mentioned that he had SoFi shares, and thank you, Miss Jennifer, so much. He mentioned he had some SoFi shares, and wanted to know, should I look at writing SoFi contracts? And I said, generally, I recommend you write SoFi contracts when the stock is over $20 a share because it's some decent premiums. But I did mention that some of the viewers on this channel have been writing $15 contracts for March 18th, trying to get maximized money. Some of you are now writing contracts a little shorter than that, perhaps even 14s and so on. But that didn't seem to really excite him too much because he has a full-time job, although he works from home. But he was kind of looking for something a little more conservative. And I said, here's an easy one. Look, and as it turned out, he had some contract, he had some options on SoFi, and he had some other investments. And I said, in theory, here's what you could do. You have some shares now of SoFi, and you can acquire more shares of SoFi if you rearrange your portfolio. And buying them down here at 1246, this is where we are right this second. 1246, I think, is a screaming good idea. It's a hell of a deal here. But here's a strategy for you. If you like SoFi and you're not afraid of the SoFi going to 8 or 10 or whatever dollars, or hoping it'll go to 14 or 16 or 20, you're no matter what it does, you're never selling it, and which I think is a smart way to go here, because sooner or later it will go. Why don't you buy the stock at 1246, additional shares, and add to your 400, and write contracts against these shares right now? Write $20 call options on SoFi for next year, January 2023. This is February the 14th, 2022. Right, January 2023 contract. They're going for about $2 ballpark. You may not be able to sell them right away. You may have to have the stock pop up a little bit to get this, or you may want to wait for the stock to get to 13 before you do it. But whatever you want to do. But if you buy some here and you get a bit of a wave to 13.50, even to 13.75, maybe a $20 call will bring you to 225 to 235 a share. Think about that. If you're paying $12.45 for the stock, let's say, and you can bring in $2 to $2.25 in cash right away in this next few days against the cost of this stock, and you're offering it for $20, and the shares do go up. Let's say tomorrow you wake up, we open our computers up, we look at our phones, and SoFi is trading at $25 a share. First thing in the morning. You never had a chance to buy into that run. It just opened there. I got to ask you this question. You bought the stock for $12.52. You wrote an option against it for, let's say, $2. You got taken out. You're going to get taken out at 20 plus the premium. You're going to get taken out at $22 for a $12.40 purchase. Are you upset with yourself? Is life not worth living anymore? I think this is a great trade. If this trade happened in a week, a month, a quarter, in 3 months, you were taken out at $22 a share on a $12.50 buy, I think that's a good deal. It's a conservative move, a very conservative move. As a matter of fact, it is such a juicy move that if you bought 1,000 shares right now for $12,500 and brought in $2,000 in cash, because you wrote these calls, you'd have enough money to buy more stock. You could buy 100 for $1,200 and another 100 for $12. You need $2,400 to get 200 more shares. You add $400 more on top of the $2,000 you just got from the premiums. You can get another 200 shares and write 2 more contracts and bring another $400 in. In other words, for $12,500, you can own 1,400 shares bought and paid for, and you're committing them for sale at $20 a share until next January. What's wrong with that? If that's all you're going to get, if they go to 21, 22, you will get exercised. You will be paid $20 a share. Plus, you got your premiums up front, which gave you the 1,200 shares in the first place. So you're going to get $24,000, $20 a share for 1,200 shares. You're going to get $24,000 putting up 12.5 right now. Are you okay with that return between now and next January, theoretically? Now, I'm not saying it's going to happen. The shares might not get to 20. If they only get to 18 or 18.50 by the end of this year, into January, it could be that these SoFi contracts you just sold will be worthless. They might only be worth a quarter, 25 cents a piece, because the stock didn't break 20. Guess what you do now? You buy those back for a quarter and you write January 2024s for maybe $25, 27.50 for about $2 each again, and you bring in another 2 grand. And if that allows you to buy 100 shares, you buy 100 and write a contract on those. Thank you very much. Thank you very, very much. Now you have 1,300 bought and paid for shares, and they're going to take you out at 27.50. If you get taken out, you got yourself, what, 35 grand now? Not a bad investment for $12,000 in. And I just mentioned that to my viewer, saying, look, if you don't have time to watch every second of every day's trades, and you're not interested in a quick 1 week flip or 2 week flip or anything like, here's a very conservative strategy on a stock you like, that's cheap to buy, give you a nice premium for 11 months, and do whatever you want when you want with it. What's wrong with that? Nothing. Nothing is wrong with that. Have you got 25 grand lying around that you've got in a GIC right now? If you got 25 grand in a hedge, in a pension, like a mutual fund or an ETF that's getting you 2% return, why don't you buy SoFi, buy 2,000 shares of SoFi, write 20 contracts, bring in 4 grand, buy another 800 shares, write those calls right away, bring in another $1,600, maximize this thing out, and dare them to take it from you at $20 a share. I dare you to come and get me. I double dare you. I'm right here. Come and take me out. That's a lovely return on your money. I really do. So what if it goes to $10 a share? Do you care? Do you care if it goes to $10 a share? You own 2,000 shares. You bought 800 more. You got 2,800 shares. You wrote all those contracts, and the stock goes down to $10 a share a month from now. Those contracts go down to 150. You don't care. You're just going, hey, I wrote 20s. I'm good until next January. I don't care what this stock does in the meantime. You can fluctuate all you bloody well want. The reality is, if it goes back to $12 3 months from now, 4 months from now, those contracts will still only be $1.75. They're out of the money, $7. And if the stock goes to 15 6 months from now, but the contracts only have 4 months left to go, the contracts will be about $1.80 to $2. I could buy them back anytime I want. You'll be thinking that, going, I can buy them back for $1.80 if I want to, and I could resell contracts at $22.50 for April 2023, and probably bring in $2.50 for those. I'll pay $180 to get these, get $2.50. I'll bring in another 70 cents on my 2,800 shares because I'm playing it really conservatively. Yes, you could do that. It's totally up to you. That can be done. So that was an interesting discovery that we went through. I hadn't, I don't promote that kind of stuff very often, obviously, but I thought, you could do that on, good old Matterport went back to 12, 13 bucks. You could write January 23s on Matterport and say, come and get me. I'm taking $20 plus $2 premium right now, baby. I'm taking $22 on Matterport. I'm for sale. I'm for sale at 22. I bought this stuff at $8 on February the 14th on Valentine's Day, watching Uncle Bruce. I bought Matterport at 8. It went to 12, and I wrote 20s against it. I'm going to get taken out at 22. I'm in at 8, and I'm going to get taken out at 22. Come and get me. Come and get me. I've got enough. I need to get a house loan. I got to get a loan on my house to do this. This is great. You could do that. It's another option. Rocket Lab's $9.69. Buy Rocket Lab and start writing calls, $20 calls when it hits $12. I mean, I'm just trying to get you $2 a share in premiums is what I'm thinking about here. It's kind of like loosey-goosey thought process here, but boy, you could do it with Sextera right now. Sextera is $11.45. This thing hits $12, $12.25. You can look at writing 20s on Sextera. You don't get taken out. It doesn't matter. You just got yourself $2 on an $11.45 stock. It's a nice return on your money when you think of the percentage return in 11 months you just made on your money. Anyway, there you go. Just me. I remember pre-Google, pre-ads on YouTube. The lamp is slipping behind you, Bruce. Lamp? There's no lamp. Okay, Credit Savage, Uncle Bruce. For all of us nerds on here, are we going to talk about that Lord of the Rings prequel commercial? I've never seen it. I have never watched Lord of the Rings. I've never watched Harry Potter. Never watched Avatar, and I don't want to on any of it. Sorry. Who remembers Badger, Mushroom? Does ME's lemonade make money, or are they growth as well? I'm not sure what this means. Tiff, I never understood the American drama about nipples. I remember we in Germany had shower commercials that show nipples in the 90s, and there are several TV shows that show nipples during the day. I don't know what the deal is. Yeah, we're really, yeah, we're still children here. We're children. Speaking of video commercials, CFVI just sunk through 15. A video channel. See that? I don't know what that means. Bobby, ladies are free to walk about topless in Canada, apparently. And Auntie's going, wow. I watched LOFR and again this morning. Pat Markley. Hi, Pat. Thank you for this membership thing here. I think Pat is renewing, coming back in as a chillin' with Uncle Bruce member. Thank you. Glad to have you here and appreciate you, as I always do. Thank you everybody for being here. We're down 330 on the Dow. We're down 9 on Rocket Lab. We're down 10 on we're up 9 on Rocket Lab. We're up 10 on Rocket Lab, 10 cents, and SoFi's up a dime. GameStop's down 431 to 119.94, and AMC is at 1870, down 11. The low on GameStop today has so far been 1665. That was about a half an hour ago. We've had a little recovery back to the 120 level, but we seem to be topping out right now. Is this a dead cat bounce and now we go down to 114, 113? It's possible. I'm not guaranteeing it, but we don't seem to be going very far from here. Anyway, somebody mentions a nipple and the entire show takes a U-turn. How about that? I think I'd rather wait till next SoFi earnings on March 1 before I sell SoFi covered calls. I think the stock could make a bigger jump. Look, it's up to you. There's millions of ways of playing this. If you write calls now and can bring in $2 now, you can buy the stock now at $12.46 with those dollars. If you let the stock go to 14 and you write calls at 240 or you write 2250s for $2, you'll be buying stock at $14 instead of $12.40. So it's all relative. It's up to you what kind of return works for you. It's all good. You can't make a mistake, I don't think. I did that kind of thing with AMC, says Nathers. I put a lot of my profits from calls back into the stock. I went from 2,400 shares to 4,700 shares. It's a great way to increase your position, and now you get to write more calls. Exactly. It's exactly it. And if you find that your SoFis go up to $17 and the calls are at like 225 now because months have passed, even if you buy them back at a loss, you turn around and do a rollover. You now write April 2023s for 2250. You might get or say, let's say you write April's 2250 or January 2023s 24s. You might bring in 275. So you're paying 225 to get 275, another 50 cents, and you just raised your exercise price. You're winning. Austin, welcome, Pat. Currently, we aren't talking about stonks. It's nipples right now. Austin, I lost 250 on the Super Bowl yesterday. Oh, no. Should have bought 20 more SoFi shares instead. Laugh out loud. Poor Austin. And Nazareth, I gotta go to the day job. Good luck on your trades, everyone. Nazareth saying, Austin, I know I haven't found a financial and moral victory in 3 months. Not your concern. Matterport has to get to 20 or can even get past 10. Lame. Someone bet 1 million on Sin to win, make 4.1 million. Didn't work out. You are overdue, Austin. JG, Uncle Bruce, thinking out of the box. That's why we're here. Thank you. Nacho, that prequel looks like something to watch for sure. Lobo Blast. Uncle Bruce, you're not a Jacob Tolkien fan? That breaks my heart. You never watched Harry Potter? No. Split. I'm actually printing 16 pages with trades from 2020 for the tax department. Oh, my God. Nacho Pat, welcome to the party, pal. Let's see. Swear, that reminds me, I need to hire a CPA for my printing. Let's go. Are you stirring the pot again with that wink and stock, says Lobo Blast, asking ABC. Everyone's laughing. Everyone's having a good time. Thank you all for being here. I've got bagels. Jen has delivered the bagels, and so we got the grape jelly smothered bagel here, toasted up. Oh man, mm, yeah, yeah. Oh boy. For those of you who don't know, mm, Jennifer cranks out a bagel for me. She cranks out a bagel for me every day, every day during the show. And more often than not, while I eat the bagel, the markets go up. So we'll see what happens. The Dow's up down 328. We'll see if this has any effect on the bagel or on the market or not. Rocket Lab's up 17, SoFi's up 14. GameStop is 119.63. I think most of you want GameStop to go down and the rest of the market to go up. I think that's what you're looking for. Mm, there goes my lamp again. That plug is suspect. Yep. You have to dig around for another one. Mm, so good, so good. Rocket Lab up 14. SoFi up 13. Let's go. Mm, 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 mm. 1948 on GameStop. So good. Mm, mm, mm. Very nice. I'd really appreciate if that Rocket Lab would go to 1188, Bruce. Pardon me. Uncle Bruce, how come you don't drink a hot beverage? I do. I drink my coffees before this show starts. I've had my coffees already. Yeah, I drink my coffees very early in the morning for sure. GameStop 118.95 down 530 right now. Excuse me. SoFi up 14. Rocket Lab up 14. The Dow's down 328. Mm. Oh my. Yeah. Matterport's hanging around 8, up to 802, up 15. 23andMe is at 478, up 25 cents today. Spire's coming back on. It was down a bit, but it's now only off 4 cents now to 321. ATIP is down a penny. Spire hit the low at around 10:30 today, 311. Now 321. 195,000 volume though, very quiet. ATIP down a penny. Smart ran up 26. Sixtera 1149 up 20 cents. Very good. Dow is now down 333. Going into the second half of the bagel. Oil up 57 cents now. 93.70 for oil. We have to watch the price of oil closely. I would say oil and gold are two feeder trade measures to kind of help us measure the what's happening in the fear trade out there. Right now, the pardon me, the VIX is up 2.71 to 30.07, so that's rising the fear index as well. Interestingly, Nasdaq is positive. The Russell 2000 just was positive; it's just barely negative. Where the Dow is down 1 full percentage point, S&P down 0.69, but Nasdaq is up a quarter of a point. Mm. Well, never a dull moment, isn't it? Most interesting show and morning. Thank you for the 352 thumbs ups today, everybody. So appreciate that. 352 thumbs ups. You guys are awesome today. Just asking for a friend. Does hanging a picture of the Eiffel Tower in your bedroom help? What Eiffel Tower photo? What are you talking about? Bobby, ATIP needs to wake up already. It's 2:22. Let's go. Mm. Lame duck is trying to juggle the numbers around here. If I sell some of my stuff, buy stock that I can write options on, and then try to buy back stock later at a different price, you can juggle the numbers all you want, lame duck. But sooner or later, you got to have them go up. But if you can make money on options, you get to keep that money for sure. We're down 366 on the Dow, and we're up 14 on Rocket Lab, and we're up 20 on SoFi. So they're doing well despite the Dow. We're at 119.09 on GameStop, down 516. AMC's up 14 cents. Matterport's still holding at 802, up 15, and ME is up 25 cents to 477. As we watch this market just kind of hang around here, down 360 right now on the Dow. Okay. Oh my. Another fun day in paradise today. Mm. SoFi just hit the high of the day, 1271. Yep, moving up. SoFi's up 31 cents today to 1271. At least it touched it. Here we go. See if the light will stay on for a bit. SoFi volume right now, 27.3 million. So trying to establish a higher level. Over at Rocket Lab, it's at the high of the day at 981 as well. 573,000 though, just a sliver. AMC just went green. It's a 1 penny higher on AMC. GameStop still down 485. Matterport has moved up from 802 to 808. The high of the day though, 822 and 3.6 million volume. So Matterport's looking a little better now. ME is still up 20, just under 28 cents here at 480. 780,000 on 23andMe traded. Spire is down 3 cents, 322. The low was 311, now 322. Volume 208,000. So it's definitely improving. Trying to get back to break even. ATIP is unchanged. It opened at 277, went down to 272 this morning. Got up to 284. Now it's at 280, just 4 cents off the high, but it's unchanged on 262,000. So any kind of movement, ATIP, we'd appreciate it. Smart Rent up 30 cents to 8.98. Sexter is up 20 to 11.49. Robinhood is up 35 cents. Vanik Vector's up 274. Home Depot down $1.50. IBM down 348 to 129.21. Interesting to see IBM backing up. Microsoft up 16 cents. 295.20. Apple up 11 cents to 168.75. Goldman down 291 to 360. The high 364, the low 358. So it's right around this 360 neighborhood. Cisco down 69 cents to 53.20. Facebook is down 64 cents. Amazon is up $78 and powering up. Tesla's up 37, powering up. Google is $28 and powering higher. So they're all moving nicely stronger here. The NASDAQ is definitely moving higher. We're up to 95 points. This bagel is working. NASDAQ is up 95 points. The Dow is now down only 267 points. We've just recovered 100 Dow points in the last 10 minutes. This means Rocket Lab is 982, up 18 cents. SoFi 1271 again. GameStop still at 119.75, down 450. AMC up 6 cents to 18.87, powering higher. Matterport at 807. ME now 480, still around these neighborhoods here. Other stocks, Bed Bath Beyond is up 3 cents. BlackBerry up a dime. Royal Caribbean up $1.73. Nvidia's up $8. It's going higher. American Airlines up 33 cents to 17.94. Netflix up $16 to 4.07. Moderna, oh man, what a shot here. Down $20 to 140. Hit a low of 138, 141 right now. Oh boy, Moderna took a hit. Wow. Anyway, there's just a whole lot of speculating going on about recovery. We're down 281 on the Dow, so that is better. Straight up to the break even, not happening yet, but it's better. Oil is still up 70 cents. We got to keep an eye on oil and gold, the two fear indicators about whether or not the Russians are really going to move into Ukraine and what the ramifications of that will be. I've got the VIX a little better, down. It's up 2.12 for the VIX, showing 29.48. It was over the 30 mark. Now it's at 29.48. Still up 7.7% though. And over on NASDAQ, we're up 86 points. The Dow down 267. S&P down 17. Russell down 1.2 points. So Russell is off a little bit. All right. Thank you all. The credit savage says anyone holding SoFi that may want to make some money while it has a pop, you could write a covered call. It could stink ask for March 18's $15 strikes. You could ask for $1 a share and see if it triggers. It's at 73 right now. I'd be asking 99 on that stink offer. Strange at El Toro, it is 1266, but it hit my profit 1269 when you mentioned the high of 1271. Yeah, weird on these different quotes. 1272 now on SoFi. The Dow down 277. Okay. Bruce, did you take a deeper look at those profit numbers on 23andMe over the weekend? I did not. I do note that the shares are up 26 cents, though. But they were over $5 a share last week. We were like Wednesday, Thursday, kind of in that 5 range. Right now we're 478. Credit Savage, do you have any hesitations about writing covered calls around earnings dates? And good morning, market. Nice of you to join us today, says Amongst Great Danes. Thank you for being here. Well, you can always you always keep an eye on earnings dates. The hope is that when SoFi does release its earnings, it'll be an upside surprise again, like last quarter. If that were to happen, maybe SoFi could take a pop. We're now popping to 1276, a little higher yet again. But you can always write 15s, and if you're wrong and your stock goes to 15, 16, you can always buy them back and rewrite 1750s or 20s and play that game or rollovers. Based on Friday, it has to get above 1350, hit $1 on that option, says Nicholas. So those shares have got to reach 1350 for those 15s to hit $1. Well, we're at 1276, so we're trying to go a little closer. You really should never have hesitations writing covered calls if you understand how to roll. Exactly. If you know how to roll options, you should have no worries about writing calls. There you go. GameStop is now 120.04, down 421. AMC is at 18.90, up 9 cents. AMC has gone positive, and it's taking GameStop a little while to kind of react a little to this. The GameStop shares had a low of 116.69 about 10:30 today. They made a recovery to 120.36 almost immediately. Then they backed off to 118.86. Now we're at 119.73 on GameStop. So this 118 to 120 neighborhood is kind of where we're at here. The high of the day on GameStop, 125.22. That was on the opening this morning. It lasted about 20 minutes, and then we gave it up. 1 million volume on the day, not heavy on GameStop, not heavy on the desperate buy side from what I can see, and certainly not heavy on the desperate I got to get outside either. So we're down 455 to 119.70. Here we go. Bobby is saying, I think the outlook for the year-to-year upcoming is going to be massive for SoFi. 1,000% gain. There you go. Bobby Greedy rubbing hands together greedily. Say it again, Bobby, says Mr. Doctor. Bama Babe, I think if you write a March 18.15, you're planning on buying it back before the earnings release too. Well, possible. Credit Savage, Bama Babe, actually, absolutely not. I just want to know what the minutes read for the January and Wednesday and the other analyst catalyst before I'm betting the market dips, so I buy back then, and on recovery, I'll write more covered calls. Once a writer, always a writer is what you're looking for. Okay. Where are we at now? 1276, up 36 cents on SoFi, 982 on Rocket Lab, 119.81 on GameStop, 18.90 AMC, up 9 cents. Matterport 808, up 21. At 23andMe, 478, up 26 cents. Spire still down 3 cents. ATIP unchanged. Smart Rent 896, up 28 cents. Sextera up 17 cents, 1146. The Dow down 266. That's what the Dow is down right now. It is a partial recovery. We're now down 250 on the Dow. It is the laggard. The Nasdaq is the winner, up 107 points, 0.75%. So Nasdaq and the disruptors, the growth stocks, that's where you're moving higher. S&P is down about 11.8 points, 0.25 percentage point. where Nasdaq is up 0.8%, and the Dow is down 0.7%. So the Dow is behind it right now. Okay. Um, Chris ever says, I meant that the January Fed meetings, as well as the Fed is having a last minute meeting tomorrow about something too. That way I'll have no cover calls out by March 1. That is the strategy by Credit Savage. Okay. Alrighty. 255 is the Dow point drop here. We're up 19 on Rocket Lab to 982. We're up 38 on SoFi. 1278. Volume on SoFi now, 29.48 million. GameStop down 443. AMC down up 8 pennies. Matterport up 22. ME up 27.5. Spire down 3. ATIP down a half a penny. Smart Rent up 28. Sixter up 17. It's a quiet one other than that, really. And Microsoft is powering higher. It's up 112. Apple's powering up at up 32. They're both green now. That's why the Nasdaq is running here. It's 117 points higher on the Nasdaq. I've got Cisco down 78. It's got a ways to go. Facebook down only 57 cents. Amazon is up 95 bucks. That's helping Nasdaq. Tesla's up 38 and Google up $37. So Nasdaq is getting a lot of help from these big boys right here. Interesting. NVIDIA up 882. There's another one helping Nasdaq. Netflix up 1667. Snowflake up 661. Workday up 307. DoorDash up 4. Airbnb up 490. We're getting a good run here. Micron up 187. Coinbase up 733. So these disruptor stocks, the Nasdaq group are getting help. Over on some of our other faves, let me just see here. Over at the ARC Innovations, Kathy Wood Innovation Fund, that's full of disruptor stocks, up 213 a share to 74.03 now. And Peloton still under pressure, down $1.17 to 33.51. So Peloton is backing off. Tesla up 38 bucks, Cisco down 77 cents, Goldman down 86 cents to 362.20, Apple up 41, and there you have it. Interesting morning. GameStop 120.08 down 417. SoFi 112.82 now. 112.82, the high of 112.87 on SoFi. Going for that $13 neighborhood now, looks like. We'll take that. Rocket Lab 984 going for 10 bucks again. It's coming back. Matterport just needs a little more, another 190. We're back to 10 on Matterport. Come on, Matterport, you can do better. 20 cents for 23andMe would get us to 5 bucks. Come on, man. $1.02 would get us to 10 on Smart Rent. Let's go. I'm doing everything I can. I'm cheerleading them on, kids. I'm cheerleading them on. Credit Savage is saying, I actually have covered calls out right now, just eating away at that time premium. I have the other half of my shares waiting in case I'm very wrong so that I could write covered calls for 17.5 to buy back 15s. Rinse and repeat. Let's see. Bama Babe is saying, or asking Credit Savage, do you believe that Fed's actions play the bigger role in stock prices than earnings, or both? And Credit Savage says both. They're not mutually exclusive. There you go. There you go, kids. All righty. We're down 221 on the Dow. That's another tick higher. A little improvement. Rocket Lab up 20 to 984. SoFi 1286 up 45 cents. Going for 13 bucks. 10 bucks on Rocket Lab. Hey. 120.76 on GameStop, down 349. AMC is down 14 cents to 11. It's up 14 cents to 18.95. AMC is up 14. Matterport 805 up 18. ME 479.5. Come on, guys. We're down 6 on Spire. ATIP unchanged. 8.98 on Smart Rent, and Sixter up 17 cents. There it is, the Battle Royale. We're down 213 on the Dow. That's going higher. Nasdaq up 123, going higher. S&P down 8. That's improving, definitely. Okay. Dr. G says 1 hour super trend on GameStop shows it's going to be down all week, so I bought some 110 puts. Savior saying I'm probably a prude, but don't want my 4-year-old watching halftime shows or any commercials. The Fed, the credit average, if the Fed raises interest rates 75 basis points, you bet your sweet petunias the market will take all of our stocks with it. So also, if SoFi kills fourth quarter, then we can go to 17 plus. There you go. Well, one can move markets down. One thing can move the markets up. Back and forth we go. GameStop is backing up. Sorry, AMC is backing up a bit. 1885 just up 1884 up 3 cents now. AMC is backing off, and GameStop is at 120.06, down 419. Uncle Bruce sold 50 GameStop for 123.90 and 50 for 128.60 to get the powder needed, as well as a limit stink offer for those 25 100s expiring Feb 5th, 16 for a 50% profit if it catches. Thank you very much. Way to go, buddy. Way to go. You know what you're doing there. You're setting this up just right. I love it. Just need a pullback on the old GameStop, which could come at any time. We're now at 119.94. And AMC, by the way, unchanged now, 1881. Just gave up a dime here in 5 minutes. Back to unchanged on AMC. We could go red there. The Dow down 239, a little dip. We're down 12 on S&P. We're down 103. We're up 103 on Nasdaq. The market's backing up just a bit. Beach Boy, thanks, buddy. Appreciate the donation and way to go on those trades. Yeah, you got it, pal. You got it. Doing what you gotta do here. Alrighty, Matterport at 8, backing up a little bit. AMC just went red, down 3 to 1878. GameStop 119.92 now. Coyote, just waiting for my GameStop cover call now. Already down several hundred from Friday. It's dropping back. Yep, Credit Savage. Coyote, sorry to hear that, bro. My family's going through it now. We all have it. 3 kids and us. My heart breaks for my 6-month-old, 3-year-old since they're not vaccinated. And H. Gregory, where do you find these trends? Dr. G, where do you find this stuff? SoFi 1279, backing up a bit. GameStop 119.93. AMC unchanged. The Dow down 210. A lot of fluctuating going on here all around, all over. Thank you, everybody, for joining me today here from Palm Desert, California. We're going to take a break now until our afternoon show, which is at 3 o'clock Eastern Time. Join me for that. Thank you, everybody, for being here this morning. Those of you who are taking my classes to learn how to write call options, way to go, you guys. Head to my website, stockmarketswithbruce.ca. You'll find classes on the tab somewhere up there. It says classes. There are 11 classes for you to watch, 2 hours each, all about how options work, how they depreciate, how they appreciate, why people write them, why do they buy them, how do you make money owning them, how you make money writing them, why they depreciate, why they appreciate very quickly at the end of their lives, how you can make money writing them. You want to become a self-employed, stay-at-home worker? You know what? You could work for somebody else, or you could work for somebody else part-time, but you could also write call options to supplement your income or replace it entirely, change your life completely, and allow you out of the house, because you can write options portably in a portable setting. You can be at the grocery store. You could be at a Starbucks having a coffee, and you can monitor your stock options with one of these guys right here. And learn how to write options and write options on the fly. Credit Savage was in Hawaii, was writing options there the whole time in Waikiki. Lovely. Coyote, Credit Savage. I remember reading that. How are you guys feeling? Hopefully you'll be on the other side of it soon. Get better, everybody. Let's go. You guys just doing okay. You guys are doing okay. Hang in there with that COVID. 173 is the down dip right now in the Dow. We're improving yet again. That's better. But GameStop is at 119.53, down 472, and AMC is down 2 cents to 18.79. So we are backing up over there. Okay. And those of you who are fighting COVID, good luck with it. Sure hope it's not going to affect you guys too much. AMC down a nickel, and GameStop down 485 at the moment. The Dow is down 191. Okay, thank you, folks. Join me at 3 o'clock this afternoon. I'll be back on this channel tonight at 7 o'clock Eastern and 8 o'clock Eastern. I will be live on Traveling with Bruce, my number one first ever created channel. I look forward to seeing you there. If you want to join me for cruise news, it's open to the public at 8 o'clock tonight Eastern time. You got nothing better to do, say hi. Come on by and say, Bruce, I see. I'd love to have you pop in there. Otherwise, I'll see you this afternoon at 3 for the final hour of trading on this market. And we'll keep an eye on what's going on here with these stocks, these options. GameStop is backing off. We'll see if it continues. And we'll kind of go from there, okay? Thanks. In the meantime, take care, stay healthy. And we'll see you at 3 o'clock this afternoon, everybody. Bye for now.